Call the meeting to order. Welcome to a workshop meeting in the Nevada Irrigation District Board of Directors, March 8th, 2022. If you all join me in the salute to the flag, please. I pledge allegiance
To the flag of the United States of America. Oops.
For which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Madam Secretary, will you call the roll, please?
Yes, Division 1.
Here.
Here.
Well, I'm not one.
There she is. Division 2.
And now I'm here.
Division 3.
Here.
Division 4. Here. Division 5.
Here.
Okay. So today's meeting is portfolio review. In the first portion, the second portion will be time certain at 4 o'clock for the plan for water. If you're interested in fully in plan for water, that will be time certain at 4 o'clock. Also like to remind those watching or participating that this is a workshop format, replacing our committee format that we used to have. So this is an open meeting, and it'll be informal. If you want to ask questions or comment during the meeting at any time, just raise your hand and we'll let that happen. And that'll be the same for our workshop with the plan for water today. So please feel free to join in and we'll get you in there. So with that, I will turn it over to Jennifer.
Oh, hi, Monique. Hi. All right. The first item that we have up this afternoon is related to a review of our investment portfolio. Previously, the district handled management of the investments with internal staff and utilized the services of a broker. So what that essentially means is it would be similar to how a private individual would do it. They would have a non-contractual relationship with a broker. A broker finds some type of investment on the market and then comes to the district and says, hey, would you like to invest in this maturity or whatever? When that occurs, there's not very good management of your treasury. We're not really doing our fiducial treasury duties that we should be doing, as well as it can be very expensive because the broker makes money by adding basis points to the trade.
Yes,
and so what we have done for this particular year, because this was one of my major concerns for the district, we have, upwards of more than $80 million invested on the market. That it's in my professional opinion that should be managed by a professional. And so in the interim basis, we have contracted with PFM Asset Management. They're a well-known asset management firm. I actually went through a significant RFP process when I was in Lincoln to solicit an asset management firm, and the PFM was who we utilized there. I chose for this particular year to go with just PFM without doing an RFP because of the urgency of the matter. It's a very uncomfortable position for that much money to be invested on the market not being professionally managed. And so we've entered into an engagement. The engagement, their fee structure works off a percentage of your overall portfolio, so it's about $65,000, give or take a year, which is within my authority as the general manager to do so. So with that said, I have asked Monique, who is absolutely wonderful, very knowledgeable regarding all investments. And all investments, public agency investments, have to be compliant with the government code. So I asked Monique and her team to do a review of our existing portfolio, make some recommendations for possible improvement, and she's going to talk about some of, generally some of the weaknesses in our portfolio and how it could be managed better. And that was primarily related to the diversification of the maturity schedules. As well as I've asked her to do a review of our investment policy, and she's proposed some changes we'd like to bring forward to the board for consideration. So this is just kind of that introductory meeting, and what we are hoping on doing is having PFM do a quarterly report out on our investment portfolio to the board so that you can better understand what is going on with our investments and how they're doing on the market. So if there's no other questions, I'm going to turn it over to Monique.
I have a quick question.
Sure.
So is PFM the ones that are managing Lincoln?
Yes, they are.
Right now?
Mm-hmm. Yep. Yeah, so PFM, they're actually really well known in the California government industry. They manage a lot of government agencies' portfolios. There's a couple of other firms who also do it. From my experience, their fee schedules tend to be around the same. I have had some great success with PFM, but it's also an issue of trust and confidence in who's managing your portfolio. It's very difficult to turn over the management of that much money to an unknown entity, and I was in an extremely uncomfortable position that the district was in for many, many years, and that's basically not having it managed professionally. And so we have engaged with Allison is Monique's partner. She's not here today, but Monique is here, and she's the lead for our particular engagement, and she's just absolutely wonderful and very knowledgeable. And so I definitely would recommend everyone listen really closely. She will talk about a lot of complex investments, the government code, the maturity scale, how our portfolio is doing overall. And then moving forward, she has also made, as I stated previously, some recommendations for modifications to our investment policy, which if the board is okay with, we would then bring back at a subsequent meeting.
Very good.
Any other questions?
It says Allison, but it's Monique.
Correct. I think it's Monique. Yeah.
Oh,
Chris is fixing that.
you know what? I will change. I will rename myself. Apologies. I didn't even notice that.
Oh, I think it was on our end, Monique.
All right. Should I jump right in, Jennifer?
Yeah, that would be wonderful.
Okay, great. Thank you, Jennifer, so much. And just logistics, am I able to share my screen here, which I can do, or do you all have paper in front of you?
If you share your screen would be wonderful.
Okay, great. I will do that now. Thank you so much, Jennifer, for the great introduction to PFM Asset Management. I thought it would be appropriate just to give you all just a little bit more background on our firm before I dive into what we hope to accomplish on behalf of the district. PFM Asset Management has been in business for about 41 years, and our particular practice is focused on the management of funds for local agencies like the district, and more specifically, public agencies like the district. We manage across the country $170.3 billion in assets. Of that 170.3, 125.9 billion is assets under management, which are the services we are proposing for the district, and 44.4 billion of that is assets under advisement. And again, really for public agency investment advisors. So what does that mean? That means that we focus particularly on high quality fixed income assets. We're typically investing in the overnight cash market or in investments with maturities between 1 to 3, 1 to 5, or 1 to 10 years. For context, the California Government Code, which governs how the district is able to invest its investments, generally allows for you to invest in securities with maturities between 0 and 5 years. Our investment philosophy focuses on safety of assets, preservation of principal first, liquidity second, and then lastly, your ability to gain a return on those funds. And that is, again, very consistent with how you would expect public funds to be managed, because that is our client base. We have a very strong history of performance and what I call downside protection, which generally means the ability to preserve principal in very volatile investment markets, which we just happen to be in right this very moment, given what's going on in the world today. Just a little focus specifically on the California market. In the state of California, we manage or advise on $53 billion in public agency assets for California investors, about half of which is in individually managed portfolios. As Jennifer very graciously mentioned, we are a trusted advisor in the California community and have been since 1989. I myself am a regular speaker for the California Debt and Investment Advisory Commission. I've recently done a specialized training workshop on behalf of the commission. California Society of Municipal Finance Officials, I recently spoke at their conference last week. or last month, really about investing in a rising rate environment, California Municipal Treasurers Association, and of course, the California Association for County Treasurers and Tax Collectors. We have memberships on a number of professional standards committee, and we're also a member of the Government Finance Officers Association, which is a national treasury body, an investment management committee. And I say all this to say, just to sort of reassure you that we have a lot of expertise in this particular market. I myself will be the primary relationship manager with my colleague, Allison County, are very well educated and are seen as subject matter experts in this particular area. My office is in San Francisco, California. I today am at my home office in Oakland, California, and am, as Jennifer mentioned, very much available to support you at quarterly meetings to walk through the investment philosophy and what we're doing on the district's behalf. With that said, if there are no questions, yes, if there are questions.
Yeah, I was wondering, should we ask questions as we go along, or would you prefer just to wait to the end?
Oh, please do feel free to jump in with questions as I go along here.
I just had a question on slide 1, and thank you for numbering your slides. Slide 1, it says it's 125 billion assets under management and 44 billion under advisement. What's the difference between management and advisement? And where would we fall?
That's a great question. You would fall under the discretionary assets under management, and I'll tell you the difference between advisement. For example, the City and County of San Francisco is one of my clients. The City and County has about $12 billion, thereabouts, on average, I think over time in their investment pool. But the City and County has a full-time portfolio management staff. They have credit analysts and others on their team. So what we do for the City and County is we advise them on their management of the portfolio. We serve as an additional resource to their credit team. We serve as an additional research to their portfolio managers, where they check in with our desk in terms of like what we're seeing in the markets, what strategy we're implementing that they may want to implement for their portfolio. For the discretionary assets under management, we serve as the district's investment staff. So we are the portfolio managers, our credit team is doing the credit analysis, and we are implementing the trade recommendations. So that is essentially a difference, us acting as your staff and or advising staff.
Thank you.
Monique, Rich Johansson, how much of our money would be at risk from geopolitical activities around the world?
That's a great question. I'm going to jump ahead and then I'll jump back to the slide right now. So the district has about 88 million total market value of the portfolio. Not much of the portfolio is invested outside the federal agency sector right now. So you have very limited risk in terms of geopolitical risk in the portfolio at the moment. If the question sort of, I take it a step further and you say, okay, well, we start utilizing PFM asset management and we start implementing or purchasing more securities for the portfolio. We have evaluated our credit list very thoroughly, given what's going on in the market, paying attention to one, what's going on in the Eurozone, which corporations have a particular exposure to what's going on with the cost of oil, cost of supply, given the situation in Ukraine and with Russia. And we don't believe we have a lot of exposure on our approved issuer list. For new clients where we are implementing new strategies, we are going to be very careful not to introduce any credit that's tangentially related to that issue. But right now, we don't see any issues with the issuers on our approved credit list as a result of the situation in the Ukraine and in Europe. Another thing to consider Mr. Johansson, is the fact that the California Government Code really limits our ability to invest in foreign corporations. So pretty much all the securities that we're allowed to invest in California are US domiciled corporations. So we don't or wouldn't be able to buy any foreign domiciled corporations in the portfolio. So that also helps further insulate the portfolio from some of that risk.
Oh, thank you. So the California corporations would not have a whole lot of exposure in Europe or in the war zone.
Yeah, correct, because California limits you specifically to US domiciled corporations and US branches of foreign banks.
And that would extend to China?
That would also extend to China, yes.
Thank you.
Okay, I'm gonna back up to this slide here, and I just wanna speak through some of the district's investment objectives. In hiring PFM Asset Management as an investment advisor, what you're doing is you're hiring us and we are acting in the capacity as a fiduciary to the district. Now, what that essentially means is that we are managing the portfolio as though we are in your seat. So our job is to ensure that we follow your objectives as though they are our objectives. The primary objectives of the district's portfolio is safety of principal. The goal is to ensure the preservation of capital in the overall portfolio. How we expect to approach that is three ways. One, only buying high quality investments on the district's behalf. So being sure that we do the due diligence in terms of the credit, that we're comfortable with everything we're buying. Not only do we pay attention to the ratings on the securities that we buy on your behalf, but we also do an independent credit analysis for each and every issuer on our approved issuer list. In addition to the sort of geopolitical risk evaluation that I mentioned a moment ago, we have also done a COVID-related and supply chain-related evaluation for all of our issuers as well, to ensure that the supply chain disruptions that we have been experiencing, as you all probably know, for the last little while, is not going to negatively impact the creditworthiness of the issuers in our portfolios. The other thing with regard to safety is making sure that we diversify the district's portfolio by sector. So essentially looking at all of the asset classes available in your investment policy and ensuring that you're not overly exposed to any one sector. We're going to do the same for issuer so that you don't have any large exposure to any one issuer. And we're going to be sure to diversify your portfolio across the maturity spectrum. Lastly, with regard to safety, you can rest assured that because you have a full-time asset manager, that there will always be someone who is continuously monitoring the creditworthiness of all the issuers and all the investments in your securities portfolio. As we learned through the last great sort of blow up in the markets, I'm referring to the liquidity crisis of 2007, 2008, it's very important to have someone constantly vigilant on the portfolio. The second objective for the district is the liquidity of the portfolio, ensuring that the portfolio remains sufficiently liquid for you to be able to meet all your cash flow needs. This is something that we're going to be paying a lot of attention to, particularly at the beginning. We have some cash flow analysis slides later in this deck, but one of the things that we will be making sure that we do is coordinate with district staff. Because you had so much of the portfolio liquid at one time, we want to make sure that we are comfortably moving some of the cash out of those low yielding overnight investments into some longer term securities. And the right way to do that is to determine the appropriate allocation amongst things that should be kept liquid, essentially in overnight or investments below 1 year maturity, and longer term investments, which can be invested in a longer term 1 to 5 year portfolio. Lastly, of course, is making sure that any security we purchase is what we call a highly liquid security. And that means it can be sold in the open market. Just to give you a framework for that, I would consider, for example, a CD that you may lock in at the bank. That's a less liquid investment because in order to sort of get that cash back, you might have to pay penalties and fees. Everything that we buy on the district's behalf, we're able to sell very easily in the open market. And that's one way we ensure liquidity. And then lastly, return on investment, which is an important thing. We want to make sure we keep it behind safety and behind liquidity. Our goal is to really try to take advantage of any opportunities that we see in the market. So we're going to be actively managing the portfolio, making sure we're doing an evaluation of what's available. And then we have on here duration management. And what we mean by that is choosing a target maturity structure and really using that as sort of our bellwether on the portfolio on what a reasonable rate of return is. Are there any questions on this before I move more specifically to the portfolio strategy itself?
Yes, we have two, Monique. Go ahead.
Want to go with the first one?
Go ahead.
Okay. Hi, Monique, Rich Johansson. So this morning, it looked like the 5-year was 1.75 and the 10-year was 1.79. They're kind of, how do you treat that? I mean, they're not inverted, but they're kind of getting narrow.
Yeah, no, that's a really good question, Mr. Johansson. One of the things that we consider is, the 5-year is really sort of the outer limit of investment authority for California. The government code does allow you in some instances to go longer than 5 years, but the 5-year area on the yield curve is still very steep compared to overnight rates. Now, the Fed is expected to lift those overnight rates over the next few months and lift it significantly, which is why that 5 years at that 1.7%. But there's still a lot of additional income you can get from moving from that 0 to that 5-year spot on the yield curve. We will likely be targeting an average maturity of around 2 to 3 years for the portfolio. And by doing that, you'll have some investments in sort of the 1 to 3 year area of the curve, some investments in the 3 to 5 year area of the curve. And what we do in terms of evaluating whether a particular area on the yield curve is attractive or not is we run a number of break-even analysis. And what that break-even analysis tells us is, say, for example, the Fed raises rates 3 times over the next year. If they raised rates 3 times and you had purchased, 1.25 year investment, are you unhappy with that purchase at the end of that time frame? And those break-even analysis helps to reaffirm our decisions to move funds out on the curve. But I think the diversification of maturity really allows us to be flexible with regard to that. Now, going beyond 5 years into the 10-year investment, that's always a tricky question. And right now, what we're doing with regard to that decision is we're sort of evaluating what the historic 10-year rate has been and trying to establish a framework for deciding when it's appropriate time to sort of look at locking in investments that long on the yield curve. And we're not quite there yet.
Thank you.
I believe there was a second question.
I had a question. This is Laura Peters. I noticed on the top, the safety is the diversification by sector. And I noticed on the next slide, it shows the sector allocation that 95% is federal agency.
Yes.
Sector. What does that mean, federal agencies? Are we investing?
Yeah, that's a good question. Federal agencies would be Fannie Mae, Freddie Mac. They're sort of those home loan agencies that were sort of government-sponsored enterprises. So Fannie Mae, Freddie Mac, Federal Home Loan Bank, those all sort of sit under that federal agency category. Now, one of the things that you rightly pointed out, Ms. Peters, was the fact that we were looking to diversify by sector. Other sectors that we would look to add to the portfolio include the Treasury sector, for example. That's not currently reflected here. Treasuries are, we think sort of the baseline, the, highest quality asset class in the market. We would look to add more treasuries to the portfolio almost immediately. There's some opportunities to add some additional corporate notes to the portfolio, perhaps some other municipal obligations. Diversifying the portfolio can help increase the credit quality, which you will see when we add those treasuries. One thing I do want to point out is that it's not unusual to see a portfolio look like this when it's been managed in-house. One of the things that Jennifer sort of pointed out and when she introduced us is that, you know, when you have sort of a staff person and they're only working with one broker, they tend to sort of buy what's available on that broker's list, right? And that broker may just have been specializing in federal agencies. And so you tend to buy what you're presented with. The benefit of having an advisor like a PFM Asset Management is that we're going to be able to more broadly access the market. And instead of working with one broker who has one list of things that's on sale that day, we'll know, for example, what our goals are for the overall portfolio. We'll know immediately that we need to add some treasuries to this portfolio, and we will go out and seek treasuries and get best execution for those treasuries amongst a number of different brokers.
Ah, that's interesting. Thank you.
I can always see why Jennifer chose Monique.
She instills confidence. It's very similar to your own investments. You always want to have them well diversified, so it hedges against risk and maximizes your potential profits.
Yeah.
And that was one of the challenges with our portfolio, as Monique pointed out, is that managing it in-house, you typically don't have the experience to even know how to invest in those things, understand what is a good investment or not. So Monique's team, and she could explain this better, I'm kind of parroting what she's taught me over the years. Monique's team has specific committees within her company that specialize in each one of those different types of investments, and they go through a credit analysis and a return analysis before they even make a recommendation for a new investment. And I don't know if you want to speak to that a little bit, Monique?
Yeah, I'll certainly speak to that, Jennifer, although I think you did a really great job of summarizing that. One of the great things about outsourcing investment management services in this way is you're sort of benefiting from economies of scale. We have, as Jennifer mentioned, a number of committees. We have an investment strategies committee, and what they do is they sort of evaluate the market, what's going on in the world, what's going on in the investment markets, and come together with a consensus strategy. Right now, I'll give you some highlights of our current strategy, which is everything is expensive. Federal agencies, corporate notes. Therefore, public agency investors should have treasuries in their portfolio. Treasuries, why? Because treasuries, quite frankly, right now are out yielding federal agencies. So you can get a higher yield on a US Treasury than you can on a federal agency security. Why is that? Federal agency supply is down, and there are a number of brokers who are just selling it. And so we think it's more beneficial for you to hold a treasury if it's going to give you a higher yield and it has higher credit quality. With regard to corporate notes and other credit instruments, what we're looking at is we're looking at geopolitical risk. We're looking at spreads and how much additional income are we getting for those corporate notes. So we're being a little bit more cautious, a little bit more selective on corporates for our portfolios. And so that fixed income investment committee sort of drives that strategy forward. And then what our portfolio managers do is they leverage our other committees, our credit committee who evaluates the credit quality of the instruments, puts together our approved issuer list, and then they take the strategy and those resources and execute on behalf of our clients. The good news is that you'll have a portfolio manager on my team whose job it is to simply look at the markets all day and select the best value investment for your portfolio at any given time within the context of that strategy. When we meet to talk about the strategy on a quarterly basis, what I'll be communicating to you is what happened in the market that led to the decisions we made in the portfolio. I'll be sharing the portfolio decisions that were made and how it impacted the district's bottom line, whether that be a better diversified portfolio, better income opportunities, and what your return was on the portfolio.
Nice.
I had a question. This is Director Beerwagen. You mentioned treasuries and federal agency. Is treasury included in federal agency? Is that separate?
It's separate. That's a separate category.
Category.
Yeah.
So where would I find that on the sector allocation?
Yeah, so right now, the district does not have any treasuries in the portfolio. So that's a sector we'd be looking to add.
Possibility with our, to go there.
Monique, is there 11 sectors allowed? How many sectors are allowed in the government code currently?
Oh, that's a good question. I want to say probably 10 or 11. You have, and forgive me if I miss one, you have treasuries, federal agency securities, which again are Fannie Mae, Freddie Mac, Federal Home Loan Bank. You have municipal bonds. So in the state of California, California local agencies can purchase any public agency within the state. So any local agency within the state of California that issues municipal bonds, you're allowed to purchase for your portfolio. Outside of California, you are allowed to purchase state level municipal obligations. So for example, a state of Connecticut bond or a Connecticut state agency issued bond. You also have supranationals that are allowed by the California government codes. I'm focusing just on code. Supras are a type of government-sponsored corporate note, essentially. They are organizations whose shareholders comprise nationals, USA, for example, France, Germany. And there are 3 supranationals corporations that are allowed for California agencies to purchase. And those are all the supras where the United States is the primary shareholder and or where the supranational itself is headquartered in the United States. Repurchase agreements are allowed as an allowable investment. You also, sort of going down the credit list, can buy bankers' acceptances, although I have yet, in my near 20 years of experience here, have yet to see someone purchase a banker's acceptance, but that's allowed. Commercial papers allowed. High quality corporate notes are allowed. So A and above rated corporate notes are allowed. Negotiable certificates of deposit. And so that's a little bit different from an FDIC insured CD, or essentially brokered CDs where you can buy on the open market. You can also purchase shares of beneficial interest from a joint powers authority. That would be like a CAMP, which is an overnight investment pool for California, and money market funds. Also asset-backed securities.
And the asset-backed and the supernaturals, were those the 2 that were added most recently to the government code?
Supranationals were the most recent to be added to the government code. Asset-backs, interestingly enough, had been allowed in the government code for some time. However, what you saw was not a lot of local agencies allowed asset-backs in their investment policies because the amount of credit work to evaluate those was a bit more onerous. So they're a little bit more complex. But asset-backs have been allowed for some time.
And asset-backed can include bundling of car loans and those types of assets, correct?
Yeah, asset-backed securities are essentially securities whose sort of cash flows are backed by specific assets. So you have credit card receivables, auto loan receivables, leases, and other types.
Richard Peterson, do you have another question?
Yeah, an example of a treasury sector, would that be like T-bills? What kind of investments are in treasury?
That you're exactly right, Ms. Peters. A treasury bill is a treasury note. T-bills, treasury notes are generally sort of 2 years and end. Treasury bonds are sort of longer dated treasury obligations, but they're direct obligations of the United States Treasury.
Okay. Okay.
One quick one, Monique, so the maturity distribution, it's going to take a while to transform our investments portfolio, isn't it?
Mm-hmm. Yeah, so
a lot of them are out 3, 4, 5 years.
Yeah, and what we would expect to do is we would expect to sort of fill in sort of this area of your investment pot here. We would likely focus really on this sort of 1 to 3 year area. You have a lot of cash that we can move out, but we have some details on the cash flow analysis we did speak about sort of why we think there's an appropriate opportunity to move some more cash from your overnight buckets into some longer dated options.
Yeah, a couple of years ago, for some reason, I believe it was related to COVID. I'm not quite sure what was going on, but there was quite a bit of money moving in and out of LAIF, our checking account, and investments. And so our LAIF and our checking account balance are fairly high. So between Monique's cash analysis as well as the one that we're doing internally right now, we're probably going to be moving some money back into investments because we don't need it for a while. And Monique, maybe you can help the board speak to the reason why you want to kind of diversify your maturity ladder as it relates to risk with the shorter term versus longer term investments.
That was my question.
Yeah,
I
no,
figured it would be.
that's a great question, and I don't think I have a yield curve in here, so I'll speak to it. I'll speak to it back here. So one of the most important things I think about, the investment, there are a couple of really important concepts in investment services to begin with. The first is that, the best time to do something is always right now, and that hindsight is 2020. We always wish we had done what we wanted to do yesterday, today. And one of the things about the investment markets in the current environment is that yields are going to rise, right? We're sort of at the belly of the yield curve right now with where the Fed funds target rate is anchored, and the Fed is going to increase interest rates. One of the things that we want to do is establish a duration target. And that target is, again, the bellwether for the portfolio, because what it does is it establishes a line in the sand that this is where you want your maturity structure to be. And therefore, when the interest rate market changes, when rates are rising and or rates are falling, you still have sort of one steady anchor to sort of point to. And that's what we mean by saying we're going to establish a market benchmark. Now, if you look at your portfolio structure here, you can see that, a lot of the portfolio is long. And the reason that that's a little bit problematic is because, as I believe you mentioned, Mr. Johansson, we sort of have to wait for those securities to sort of move down the yield curve, and it doesn't give us a lot of opportunity to take advantage of what's happening in the market now. If you had sort of a steady maturity structure, then there will always be funds here and here to reinvest as the interest rate environment changes. And it would really help allow you to sort of more reliably rely on those interest earnings in the portfolio. Now, because you have so much cash available, we do have the opportunity to do that. But our goal would be to have your maturity structure be a little bit more stable, a little bit more even, so that you have assets invested across every maturity band on the yield curve. So you're not overly weighted to longer term investments or shorter term investments.
Yeah, so for example, if something catastrophic happened and we needed a lot of cash quickly, there could be a potential where the market conditions were right and we could make some trades that didn't result in huge losses. But that could also be unlikely. And so that is why you want that maturity ladder still over the full 5 years, more well spread.
Yep.
Exactly.
Will you be commenting on the size of our cash portfolio and what it should ideally be targeted at?
Yeah, so one of the, that's kind of gets into that reserve conversation. And so we started that conversation during the budget process. And currently our reserves are not fully funded. However, they are fairly healthy funded. And so I think that once we kind of start moving through the plan for water, continue our cash analysis, continue with this cleanup, start working with Monique and her team, we will then start laying out some reserve analysis, because as you know, we've talked a lot of times, you need reserves and cash on hand for cash flow. You need cash on hand for if you're saving for a capital project, so you kind of want to annualize your annual average capital spending over 5 years and make sure you're always kind of saving up. You need cash flow for those construction projects. You always want kind of a year of cash flow for construction projects. Remember, most construction projects, the big payments are going out in the summertime. And a lot, we get steady revenue through the year, but we get two big payments every year with property tax payments. And so since we're on a teeter plan, we only get those in February and in June. And then lastly, we kind of have this risk category. And so that's where we need to really dive into is risk, long-term capital, and then what is a healthy level of operating cash on hand for just operational considerations. And so once we go through that analysis, then we will say, okay, do we have too much money or not enough?
Thank you.
In that
Yeah,
discussion,
thank
then-
you. And
Next slide.
Sorry.
And this dovetails nicely into, I think, Monique's next slide, but President Vera Wagner, did you have another comment?
Two different conversations going here, and I don't want to get in the weeds on how we decide how much reserve money we should have and which year cycle they fall into or be available, right? That's another discussion.
Right, and so one of the considerations, and this is a conversation Stephanie, the accounting consultant, and I were actually having today. I know Monique and I have talked about this in my past life, as well as this cash flow model. And so you essentially have your checking account, right? So that is our Bank of the West account, and we still have the Wells Fargo account that payroll is still being paid out of. So we're running two main checking accounts. Then we have LAIF. So LAIF is the local agency investment fund. That's more of your short-term investments, low return, but that's what most agencies use as their kind of savings account. We can pull cash out fast. It is, essentially. And then we have our investments on the market. And so you always want your money working for you. We don't want it sitting idle. And so a portion of those reserves, where all of our money's pooled, we all do pooled cash, it's all in the big bucket, belongs to all the funds proportional to that fund's amount of the bucket. And then we have to decide within the bucket, okay, what portions for catastrophic events, risk, the flume burns down. What portion is for, we're saving for a big $20 million hit that's going to come in 5 years, or any other obligations we have. And so over the next year, we're really going to start kind of parsing all of this out to have a better understanding of our cash needs on a daily basis, short-term savings basis, and then the investment basis. And so this is just really the initial step in getting a professional investment manager in to come manage all this money, because that is our biggest responsibility, especially as the board, is your oversight of the public's funds, and it's a lot of money. So, be proud that we're taking this first step, because I think it's a really good thing for the district.
Absolutely.
Are our reserves right now in, which bucket? Which bank account?
The bucket's even bigger, right? The bucket has layers, and within the layers, you have U.S. Bank, which is all of our investments, is a layer in the bucket. Below that is LAIF. We have all of our pooled cash in one bucket. Below that is the bank account. Collectively, all of those bank accounts are pooled cash, and each fund's proportional share of that total pooled cash is equal to their fund balance. And so that's one of the things that was really missing in our budget documents, in our conversations, how we looked at money, is we were really focusing on looking at money from the bottom up, and we really need to look at it from the top down, because we run a pooled cash system. So once the cash goes into the bank account, it's all pooled together, and so it's all based off of each fund's proportional share.
Okay, and on that note, does that dollar amount that the 88 million include the LAIF and checking account?
No, that's just what we have invested on the market. Yep. So we carry, depending on what's going on, around 10 to 12 million of LAIF, and then we usually carry around 6 million in Bank of the West. And then I'm trying to keep about 2 million in Wells Fargo. As the board knows, we will be bringing an item forward regarding the banking situation. We do have, it's not normal to have two bank accounts. We used to have more than two. So we're going to be kind of cleaning all of that up as well. So when we're looking at total fund balances, and you take out the non-cash items, depreciation, and all those things, and we get to just our cash fund balance, that's when you could say, okay, that's how much the proportional share of the pooled cash each fund basically is allocated.
Thank you for clarifying all that.
Yeah, thank you. That helps.
Go ahead, Monique. Sorry we got off on the...
Oh, no worries. This is a good opportunity for me to share that the sort of cash flow analysis is focused on the pooled funds. So I feel like all that discussion sort of established the concept that when we're talking about short and long term, we're only talking about it in the context of the pooled investment portfolio and what investments are best suited to sort of the short term liquidity portion of the portfolio, and what investments or what amount can be allocated to the longer term, what we call core portfolio, which is generally 1 year and out. We have a cash flow model that we use. It essentially analyzes the historical cash behavior of the pooled investment portfolio. And what it does is it allows us to evaluate the growth of a portfolio over a number of different historical periods. It helps project future balances of that portfolio. So it evaluates the seasonality of the cash pattern of the portfolio over time. It also helps us really focus on, if there is a short-term portfolio, what the structure of that portfolio needs to look like in the near term. And then finally, identifies the appropriate allocation between short assets and, again, that core portfolio. When we took a look at the district's historical balances, we evaluated the period between January 2017 and December 31st of last year. And the district's balances have had a fairly healthy annual growth rate of about 7%, which you can see here in this graphic. So the growth rate of the portfolio has been growing fairly steadily. What we did with that was then take a look at what the historical allocation of the pooled investments has been over time. And we looked at that on top of what we call our modeled core. And that modeled core is where our account analysis suggested your long-term portfolio balance should be. Now, if you look at this graph here, this shows it. The dark blue on the bottom is the actual core for the portfolio. And again, core securities were things that were actually in a securities portfolio in longer termed investments. So think of that federal agency category we're looking at. That's probably all sort of the actual core of the portfolio. And you could see in the sort of turquoisey blue is your LAIF. So that's actual like overnight investment funds. And this is that period that Jennifer mentioned earlier where the district sort of moved a lot of money from the core portfolio into LAIF, that overnight investment fund. And you can see where the district started moving funds back into the core portfolio. The lighter blue here at the top is your bank accounts, and then that yellow line is where we considered the model core. So you can see here with this yellow line that we still have a little bit of additional funds that we can add to the core portfolio, but this is really where we're going to be focusing. We don't want to go invest too much in the securities portfolio over that line, because that's where we think that short portfolio is, which is the difference between this yellow line and the top here.
Can you comment a bit?
Yep. Go ahead, Ms. Hull.
Could you comment a bit more on the previous slide with the average annual growth rate of 7%?
Yes, that's my question too.
That's not yield, Monique, isn't that?
No, that's not yield. That's actual cash.
Oh.
That's,
No.
yeah.
That's it. So you're seeing the growth rate. So as our cash balance increases, right, our investment balance increases. Our yield has not been that high.
No, I didn't take it as such, but I just, I get, I don't want to, that is a significant increase in the amount the district is putting into its cash balances and investment opportunities. So I mean, did the district have a strategy around that? I mean, is it just, it happened? I mean.
It correlates to the 5.72% water rate increase.
Not necessarily. It also can correlate to your reserve policies, right? So we do have some really hefty reserve policies. You have 55 million reserve just for hydro. That's a lot of money. But with that said, we have some really big expenses coming up in hydropower.
Right.
So it is a lot of money invested. Is it too much? I'm not yet at that point to even speculate. I do think that we have some money we can move out of LAIF and invest, which probably coincides. My rough calculations are about we should move probably around $3 million soon. but we're going back and doing some double checking and confirming right now. But it is prudent that we go through our reserves and really lay out some longer term plans before we do the rate study, because we are due for a rate study. And essentially, your fund balances for rates inform your rates moving forward. And you have to remember, when you set rates, are based off of assumptions on revenue, what you're going to sell, and expenditures. And I've never seen anybody be spot on any three of those assumptions. And so what often happens is if you've either haven't collected enough money, and so you're starting to run in the red and you need to raise rates, or you've collected too much money and you can utilize that existing fund balance to offset any future planned revenue increases that are needed just for increases in expenditures. Expenditures year over year, they tend to increase around 6% on average year over year, regardless of the type of utility or enterprise you're talking about. But with that said, inflation has really increased a lot this year. So we're gonna have to take all these things into consideration with a little bit of a volatile economy, inflation still increasing, our long-term commitments for our FERC relicensing, as well as with Scott's Flat Spillway. And then we have some really big infrastructure needs on the water side that we haven't been attending to, right? We have aging infrastructure that's all the same age. You know, we need to start coming up with some more dedicated plans of water main replacements, either making our treatment plants more efficient or starting to replace them built at the same time. And so it's going to be a little bit painful because we're not going to exactly have an answer right away. But I think over the next year, the good work that the board is doing through the Plan for Water process, as well as the comprehensive financial cleanup, will help us get those answers.
But it's nice to have more reserves than less.
Well,
It's just a balance, you know.
It is absolutely a balance.
And I've been proponent of a workshop delving into that, because, you know, we all come at it from a little different perspective, I think, and how do we know what is the right balance?
And do we know the basis of the previous numbers of our reserves?
There was some, and I've asked staff, there is some basis for the previous balance of the reserves. But there are also a lot of uncertainties now that we may have not considered during the establishment of those previous reserve policies. And due to the uncertainty of some of the accounting that was going on prior, especially with not pulling out overhead costs and doing some of the more long-term capital plans, and looking at the acquisition of the South Yuba Canal, and in the context of FERC relicensing and some of the associated risks, you know, we need to kind of clean everything up, take a step back, and do a wholesale analysis on all of it. And it's not going to be perfect, right? But these are analyses that always need to be done, so that if you're missing the mark, you're not having to make these big wild swings in rates.
You have a basis.
Yeah. So we're gonna get there. I know that's frustrating not being there yet, but this is one of the first steps. Because one of the difficulties before is that and it's always in a weird policy, so I always have to read, in the reserve policy, in policy 3040, it requires that any revenue from investments be allocated to Fund 10, which is water operations. Now, you'll recall during the annual budget process, we modified the allocation of those investment revenues to be on a fund basis. So now that we're allocating overhead expenditures, we're going to be allocating investment revenue. We're going to have a clear picture moving forward of the real health of each fund, which will aid the board in oversight, but it'll also greatly aid you in making decisions on funding a capital projects, rate setting, fee setting. So I think you'll be in a much more comfortable position once we get done.
The timeline for that? Do you have any idea?
Well, it's primarily related to the financial system upgrade, which we've talked about a little bit. So in the interim basis, if the decision is essentially that if we move to Tyler, and we've talked about this several times now, if we move to Tyler right now, the likelihood of us failing with that transition to a new ERP is very, very high, from the standpoint that you essentially want to clean up all your finances before you move to a new system, or essentially we're going to make a bigger mess. So in the interim basis, we have a dire need with our current server that Pentimation is on. It's essentially at risk of dying any second. And if that thing dies, we're going to be left with the base code and data only. So we will be purchasing, since Pentimation has been in existence, we've had it for whatever, 2 decades, the district stopped purchasing the annual upgrades, like with Windows or any software system, there's an annual upgrade. Nobody was upgrading the server, and so we will be upgrading to the current version of Pentimation just to get us out from the potential risk of this server failing. Because if it fails, it is going to be catastrophic. We've already hit a couple of situations where we were minutes away from not being able to run payroll. Just the system just stops working. Sometimes power goes out and the generator kicks on. The server may not actually come back up. It has to be treated with kid gloves. And so as a stopgap measure, we're going to do that upgrade. We are laying out a project plan for that upgrade, which is extremely time-consuming from an IT perspective and a finance perspective, as well as from operations with the utility billing system. We're hoping to, they're telling me it's going to be July. I'm pushing for May, so I'm going to guess the baby's going to be split somewhere in the middle. So we'll be reporting back on that once we get a better handle on it.
Right now, we're just going through all of the work to make it so we can put those upgrades on?
Yeah, so essentially the new system is a cloud-based system. Unfortunately, we do not utilize our financial system in its entirety, and this is nobody here's fault. The system was set up a long time ago and wasn't necessarily set up in a manner that is conducive to fund accounting and handling pooled cash. And so it's really kind of this project facility-based accounting setup, and we need to transform a lot of it into more of a fund accounting setup. But what has happened is we run a lot of off-book tracking as far as reports, databases. We have a lot of kind of strange offshoots kind of attached to the system that are manipulating data for us. So we're having to go through and decide what are we for sure going to be taking with us and what are we going to start running out of the system, and then at the same time cleaning up how we're doing the accounting, closing and reconciling and doing all those things, setting up the new funds related to the new funds that were adopted within the budget and the cost allocation, as well as kind of starting to handle our pooled cash fund. So there are some big changes. We're going to do a full update with the board in a meeting or so. Probably the 23rd we're shooting for, so stay tuned. We'll give you a better update. We're still kind of digging and trying to figure it all out.
We need to do all that before we get to Pentimation.
Yeah, there's a lot that has to be done before, and there's a lot that can't be done till. So it's kind of half and half, I'd say.
Comes first.
Well, it is a chicken and the egg, right? So some of these things, you don't want to do them twice either. So we're having to go through the list and say, okay, we're not going to do this now because we don't want to have to do it again when we do the upgrade.
One thing that might help us is if we could get at some point a timeline for how the various pieces fit together, because we've talked about the plan for water and the capital requirements there and
how it all lines up.
Yeah, and then we have the rate study that needs to be completed. You've got your financial system transition, you've got the investment strategy changes. So I think that it'd just be helpful to see either some kind of a matrix or tree. Maybe it's a tree that's, but something that would help us understand how these pieces fit together and what is a realistic timeline, because I can appreciate how much work this is, and I just think that, that rate study is really critical because we can't adjust, but we don't need to adjust until we know.
Right. So it's great timing, because I was having a conversation with Stephanie about this today, because she was trying to get a handle in her mind what we were thinking with the rates and where we were at. As we talked through it, and we'll lay this out on paper, my gut tells me we're going to have to do kind of interim rate study and then do a longer-term rate study once the plan for water master plans are done, because those will greatly change the rates. A large component of the rates is related to the long-term capital plan. And so without having that done, I don't think our rates will be fully informed, but I also don't think that we should wait to update our rates. And so I think you're gonna see a couple baby steps instead of the big, do a whole new 5-year rate study. I think we're gonna kind of probably end up doing start one in about 9 months to a year, start it. So we won't be starting the process for probably around 9 months. Have that one go into effect sometime in 2023. That one be in effect 2023, 2024, and then probably then 24, 25, go out and do a more thorough rate study based off some more long-term capital planning.
I think that's a great
Yeah.
vision.
Yeah, and we'll lay it all out. It does get complex when you have all these kind of moving pieces, and then you have to take consideration your long-term investments and your yield and what's going on. So we can lay it all out so we can have a long conversation about it.
Well, this is really good work, and I don't think the average constituent would have any concept of the complexity here. And so I think we don't want to send a message that, oh, gee, we're on rate hiatus here. I think people need to understand very clearly that these incremental steps and why they're required and the foundation behind them. So, because I think people are going to be, I think this is really impressive what's taking place. But it's not what people are used to.
Right.
And I don't want them in 2024 or whenever it is that we start kind of getting back on the
Regular cycle.
yes, that, whoa, what happened here?
But we need Tyler before we do a rate study.
No, we will not. We will have an interim rate study before we go to Tyler. Tyler will probably be a year and a half out at
Okay.
minimum.
All right.
This is the timeline that I agree with Karen.
Yeah, we need to
Getting
And we will.
a piece of paper.
Now we have it.
Yeah,
Now we have it.
yeah, part of it is, no, but also this is what I'm flushing out, but so it's resulting on, I need to finish the timeline negotiations with Pantamation and with staff regarding the interim step upgrade. We're talking with Tyler right now on negotiating a contract amendment for that particular product to see when we can move forward. We have the banking transition. We have, and then the whole cleanup and an interim rate study. So we'll lay all this out, but, it should be noted that staff has been doing it. This is a lot to ask of staff between the cleanup, the Pantamation upgrade, and so huge kudos to Debbie and her team. They're doing an absolutely wonderful job rolling their sleeves up. They've been just tremendous, as well as to John and the IT team. It's a lot to ask of them to do, and they've been absolutely amazing and are doing a wonderful job.
And the water keeps flowing.
Yes.
And of course, Chip keeps us flush with water. Thanks, Chip. All right, sorry, Monique.
Thank you for your patience.
No worries. I have 2 more formal slides. I did want to make sure there were no other questions about the cash flow analysis before I moved to the investment policy review. All right, seeing none, hearing none. So we did conduct a review of the district's investment policy. Now, we talked a bit briefly before about the California Government Code, which has broad authority for California public agencies like the district to invest. And many agencies, like the district, then create their own investment policies using the California Government Code as a source. What we do when we work with new clients is we always conduct a review of the investment policy and try to identify areas in the investment policy which can create either more investment flexibility and or enhance the protections under the investment policy. We also evaluate for best practices and look to incorporate those into our review. So we have a couple of investment recommendations for your policy here. Now, just to start, the investment policy itself is generally well-written and comprehensive. I tried to summarize our recommendations to give you a sense of why we're making those recommendations, and then I'll just sort of walk through the first. And I believe you have a black line of the investment policy itself. The first was to strengthen safety parameters. We generally recommend that our clients add language to their investment policies to reduce exposure to any one issuer under the policy. That's part of our diversification strategy. Not only are we looking to diversify your portfolio by sector, as I talked about earlier, but we also want to make sure that we diversify by issuer in the policy. And having that written explicitly in the policy helps with that. Internally at PFM Asset Management, we have our own issuer diversification guidelines, but we do think it's a best practice to have that explicitly stated in your investment policy. The second set of recommendations is to expand investment opportunities to add certain investments which are allowed by the California Government Code. The first was to allow investment in supranationals. As I mentioned before, supras are corporations whose shareholders comprise countries, United States, France, Germany, etc. There are 3 supras which are allowed by the California Government Code, all of which are domiciled in the United States and where the United States itself is the primary shareholder. We also recommended you expand to allow shares of joint powers authorities. Joint powers authorities are essentially some pooled investment options such as CAMP, which is a California Asset Management Program. That's an alternate liquidity option. There also exists CalTrust, which is another type of joint powers authority. And those are essentially pooled investment programs, which could be good opportunities for liquidity. Other thing we added was to expand municipal obligation options. So as I stated before, California allows for local agencies in the state to purchase any municipal bond issued by a California local agency. So think school districts, community college districts, public power, etc. But the law also allows you to purchase state level obligations for other states outside the state. So state of Connecticut bonds or a Connecticut housing, for example, issue. And that just gives us more opportunity set in the municipal. We also wanted to increase flexibility. So we did edit some language regarding active management. So that would allow us to take advantage of any opportunities that may exist in the market. And allow us to actively manage the district's portfolio. To give you all a sense of some of the trades that we might do, for example, a lot of our trading activity right now is swapping from federal agencies into US Treasury securities. So as I mentioned, federal agencies having yields lower than treasuries, there exists an opportunity to sell those federal agencies and move to Treasury securities. That's a type of active management trade that we may do in the portfolio. And then lastly, we did add some language related to the use of an outside investment manager. For example, PFM Asset Management, we have our own broker-dealer list that we use. We have our own financial institutions that we partner with, and just making some of that language explicit that if you do use an outside manager, we would be relying on our own resources. Any questions on any of those? Yes, Ms. Hull.
We have Director Hall.
I'm wondering what the largest consolidated investment would be as a percentage of the total portfolio, if that's a clear question. So in other words,
I think that's a clear question. You're the largest issuer you would have exposure to under a portfolio managed by PFM would be the United States Treasury.
What percentage?
I say our portfolios on average have at least 30% in the Treasury sector, but that would be your largest issuer's exposure. I do not have the breakdown on where your current issuer diversification is, but given the allocation to federal agencies, it's likely Fannie or Freddie Mac currently. But we would be dropping that down significantly.
How much would you keep in the federal bucket?
We would likely move that allocation down over time. So I don't want to give you all the impression that, on day one, we're going to immediately reduce the federal agency allocation by half. We'd be doing it in a very measured way over the next several quarters. but we would typically not see an allocation to the federal agency sector in our current portfolios much higher than 30%.
Yeah, so you have to remember how our maturity average of our portfolio is really spread between kind of 1 and then on the latter 4 and 5 year end. And so in order to diversify our holdings, we either have to have those kind of 1 years come up for maturity or invest new money. And so that's how slowly over time we'll start diversifying the portfolio. Because if we de-invest from something before it's mature, unless the market conditions are right, you can sometimes make money or break even, but without it fully being mature, we wouldn't receive the full benefit. And so we have to carefully balance that diversification with the market, with what's coming to be mature, and then with the investment of new money. So I think based off of kind of our quick and dirty analysis that we're not quite settled on yet, we'll have some money to invest here pretty soon.
But in the end, it'll be 30-30.
Yeah, but over time, depending on the market conditions.
Yep.
So, Monique, can you speak to an ideal diversification percentage?
Yeah, I mean, I think those percentages I threw out were sort of ideal percentages, and as Jennifer said, that we are relative value managers, so we don't have a target allocation in mind. We have sort of somewhere we want to be. But to get there, we're really paying attention to what's happening right now in the market. And we want to make sure that we're making choices that are in the best interest of the district at the time we make that choice. So we're paying attention to spreads, where the value is in the market. And this is going to be a very measured, careful reallocation of the portfolio. And we'll be reporting out quarterly what we're doing.
Director Heck, you have a question, and then Director Johansson.
Well, thank you. I just want to really, I am so impressed with your presentation. I'm so grateful to Jennifer for really elevating our investment strategies by, getting professional management. I came out of the, financial services sector in real estate, and there's just nothing more important than having a professional manage and seeing where we were and where we're headed. I feel really excited for NID. And to Karen's point, I don't think our constituents will really understand the complexity and the time that it has taken to get here and how much more it will take to achieve the final goal. But Monique, you really inspire confidence. And I thank you, and boy, Jennifer, I thank you and staff really for bringing this forward. This is a huge piece, big lift here. So thank you.
Thank you so much, Director.
Amen.
Hi, Monique, Rich Johansson. So federal agencies currently, what is Freddie Mae, or is it Freddie Mac and Fannie Mae?
Mm-hmm.
How much are we exposed currently? What percentage?
I don't have the exact breakdown between Freddie Mac and Fannie Mae for the portfolio, but I believe about 95% of the portfolio, let me go back, 95% of the portfolio is in the federal agency sector. And those are the two that are the prolific issuers there.
And they're still doing derivatives?
You're not really allowed to do derivatives. Freddie Mac and Fannie Mae, they did get some support from the U.S. Treasury back, for 2007, 2008. They have been asked to wind down their investment portfolio, so they have been issuing less debt, which is another reason why their debt is so expensive. There's less of it on the market. They have paid back all of the funds that they sort of borrowed from the Treasury, so they're sort of in good standing there. But they are winding down their balance sheet and are issuing less and less every year.
Okay. But I've heard that they kind of went overboard for a while, and they still have a significant amount of money out there.
Yeah, they do have a significant amount of debt. I think the original goal was to sort of get government-sponsored obligations out of the housing game, out of the housing market as a support. They have a number of different products that they issue that are, backed by mortgages. They do mortgage mortgage-backed securities. They do collateralized mortgage obligations. We are comfortable with those types of instruments that they issue because of the credit work we do on those instruments. But I want to assure you, we're sort of not investing in private mortgage companies that are sort of outside the federal agency sector. Sort of stay out of that
Thank you.
market. Okay. Any other
Dr.
questions
Hall.
for me? I have one more slide, which is just sort of a wrap-up slide about what we're doing for the district.
I have one other question, which may be directed more toward Jennifer. I thought when we had a prior conversation on this general topic that the amount that we'll pay Monique's firm for their services will be offset by the increased yield that we will get from our investments by having a professional manager.
Typically, yes.
Okay.
And that's my question, is it typically yes, and maybe she could
Yeah, so we have,
weigh in on this one.
yeah, so the fee schedule for PFM, it's based off of a sliding scale that is divided by different amounts in your portfolio. So 0 to 25 million is at, I believe it's 0.001%. 25 to 50 is 0.008, and then 50 and above is 0.006%. Isn't that correct, Monique?
That is correct, Jennifer.
I wasn't sure. I just had pulled that off the top of my head.
Yeah.
So with our current portfolio, that's about $65,000 a year, and we should be seeing a greater yield than that, as well as when you're purchasing, and Monique could speak to this better than I can, when you're purchasing investments through the broker, they're using basis points on the back end, and from my experience, that's typically much, much more expensive. But Monique, you're probably better suited to speak to
Yeah,
that
I mean,
than
I think Director Hold, that was a great question to sort of transition to this slide, which is sort of what we'll be delivering to the district. We at PFM Asset Management believe in full cost recovery, which means that we're really working hard to ensure that sort of value you gain from our services is going to offset the cost of our services. And, our services will cost the districts about 10 basis points per annum on average, based on what we're managing. We believe that we recover that through a number of different ways. One, providing you with sort of the back end resources to appropriately monitor the portfolio. If you think about it, you sort of get an entire staff of folks for less than the cost of a full-time employee at the district. So those sort of resource savings on the top is really, I think, one of the ways that we help with cost recovery. The investment markets today have been volatile for the last couple of years, and knowing that you have a firm that has a really good track record of safeguarding those assets is important. And we do have the ability to generate attractive yield and revenue for the portfolio. One of the things that we're going to be doing every day is really mining the markets for opportunity to enhance the return on the portfolio. What you'll find, I think, outside of sort of the market we invest in is that having an asset manager that really focuses on this high quality space is very unique. And our trading room, our portfolio management team is really set up to focus on finding the best relative value within that sort of short duration, 1 to 5 year high quality fixed income space. And then lastly, I think we really work with you to make sure that you feel confident in what we're doing through our reporting apparatus. We work to ensure that your staff, Jennifer, her staff, have all the information from us to answer any questions you may have or your stakeholders may have about the investment program. And again, I'll be working directly, me and my colleague Allison County, who could not be here, will be working directly with Jennifer and the district staff.
From my experience, we should be having a greater yield and also be ultimately paying less than we were before.
I agree.
Well, Monique's point about staff time savings is a really important one too, because I mean, that's a huge responsibility to manage this kind of money on behalf of an organization. And as Ricky commented, you do instill a great degree of confidence, Monique, in your professionalism, knowledge, and articulate nature. So thank you for that.
Monique and her team are wonderful. When I first got here and started asking about the investments, I was alarmed. It's a lot of money. And I did call Monique right away and said, can you please help me? Will you just please look at the portfolio for me? Her team, they're wonderful. I ask them pretty silly questions sometimes, and they always take all the time in the world to answer the questions. Worked with all aspects of their team, even on just when we're doing just trading, and they're great. We have all the confidence in the world.
Beautiful.
That answered my question. I was saving to the end. What is Monique's professional opinion about our portfolio and the return? I think I've heard the answer already. So.
Yep.
Yes, we have.
But I really do look forward to working with you. And as Jennifer mentioned, if you have any questions, we're happy to come at invitation. And also, again, our plan is to meet quarterly to discuss this.
And so moving forward, what we would like to do is, so quarterly, Monique will do, or Allison, they're both wonderful, will do a report out to the board on investments, how they see the market going. I always find that to be a real interesting part of their presentations. So look forward to that. And then at a future date, if we don't receive any comments on the investment policy revisions, we'll be bringing that back also to the board for consideration.
Are you the treasurer at?
Yes, so right now I am the treasurer. We're gonna kind of keep going through the financial cleanup at this time until that duty would get kind of pushed over to a finance director. There is a high degree of responsibility associated with having that much money, so I need to have confidence in the team, which I do, but I would just like to be able to monitor it personally for a little bit longer.
So we're going to need a finance manager in the future.
Yeah, we'll need a finance manager in the future. I think, the plan is to get further through this cleanup, probably another 6-9 months, then start looking for a finance manager. Right now, it would be risk of failure or lack of success for somebody to come in and kind of jump into the middle of the cleanup that we're doing. And we have a lot of synergy with our existing team, as well as we're using the salary savings to pay for Stephanie. And then in that meanwhile, I'll continue to serve as acting finance manager, but also being PFN's point of contact for actual trades and making sure everything's going well. And then, as Monique knows, I have a special affinity for wanting to watch the investments. It is very concerning to me. So even if I turn the reins over, I won't completely be out of Monique's ear on everything. And she knows she's worked with me in the past, so she's used to it.
Director Heck, I see you waving.
Thank you. Thank you, President Beerwagen. So I just want to be really clear, because Jennifer, I asked you this earlier, but I don't think, so even when we hire a new finance manager, whenever that is, 9 months from now, it is your position that we still need this kind of professional portfolio management so that it's two separate things, right?
Absolutely. I don't think there's nobody that I have met to date in the business that is well versed in all things government finance and rates and fees and CAFRs and investments. Those are two full-time degrees and different jobs. And with as money we have on the market, it's my professional recommendation that we continue to engage with a professional investment management firm. We don't have the experience on staff for me to have the comfort level in staff managing investments, nor do I think it probably provides the comfort level for the board. And then as we start moving forward, I think you're really going to like the reporting tools that Monique's team provides and the oversight just her team has over the investments, right? We want to start looking at, when you have large amounts of money that are not yours, you need a lot of separation of duties and controls over money. And frankly, this provides one of those additional controls, is having a third-party team that's managing what we're doing and providing oversight. This is somebody, Monique will be coming to the board and presenting. You don't have to go through me to ask your questions, ask them directly to her, and I think that that's really important for the board to have.
Checks and
Agreed.
balances.
Oh, yeah.
Mhm. Internal controls, checks and balances, right on.
Anything else, Director Heck?
Nope, done, thanks, guys.
I don't, oddball question. So your firm is bonded, or you have a fiduciary responsibility? How, you guys have to be bonded or not?
We do have a full insurance program, so we are bonded. We carry professional liability insurance, cyber liability insurance, etc. So we are bonded, and we do act as a fiduciary on the district's behalf.
And then remember, US Bank holds the funds. So the PFM doesn't hold the funds in their bank account. They're held, through,
Right.
they go through a bank.
Yes.
No, I would assume as much, but thank you.
Yes, there's much more security with PFM than there is with a staff member in investments.
Director Peters, go ahead.
Yeah, I just had a quick question. So Jennifer, just a rough ballpark, how much of your time does it take to be district treasurer and acting finance manager? It seems like those are.
It does take a lot of my time, but in reality, that's our biggest risk right now, and so that's where my focus is needed. I need to have a comfort level with the finances so that I can make recommendations to you so that you can make decisions. It does take quite a bit of my time, but our focus for this year really does need to be the finances and IT. And then once we get things kind of all cleaned up and more going in a normal schedule and in a normal just routine processes, then we can start, doing fun things and start branching out and doing bigger projects and those things. So, right, yeah, we'll start tackling the flume of doom next.
Yeah, 100-year celebration.
The 100 years,
Yes, that too.
it's not in our budget. You spent it on a book.
So that was your question.
That was my question.
Mine for you, Monique, my last one is along the lines of, due to the fact that we're regulated as a government agency, is it your professional opinion that we do receive a less rate of return on investments, or how does that compare to the average guy investing in the market?
Yeah, I mean, I think it's appropriate that governmental agencies receive a lower rate of return because the primary objectives for your portfolio are safety, are liquidity, and those things come at a cost in the market. So one of the challenges when looking at returns for these types of portfolio is balancing that against sort of the layman's understanding of where returns are. So last year when the stock market was giving everybody 20 to 30%, it was really hard to talk about buying bonds at 40 basis points. It just kind of, folks were wondering like what's going on there. But the reality is that we're really focused on safety first. So you're looking at very high quality, lower yielding investments. And we want to make sure that if there is a need for the cash, that you have access to that. So that all comes at the expense of return.
Mhm.
You got to think of like the Warren Buffett model, right? I think if you look at his portfolio, on average year over year, he's made like 7% year over year. He doesn't have the highest yield of any investor, but he has the most wealth because of the length of his investments. So he made 50% of his money when he was older than 50, and like the rest of the money, past that. So I think you just need to remember we're in it for the long haul. We just turned 100 years old, so we want to be Warren Buffett. We don't want to be Elon Musk, whatever his name is.
His political influence contributes to quite a bit of that. So Monique, you're saying no Bitcoins for us, huh?
No Bitcoins. Although I always tell a funny story, the state of Florida lets those guys do whatever they want. And there was Florida local agency who was asking about cryptocurrency, but not for California. Sorry.
I bet you
Thank
next 10
God.
years it'll be here.
No, I hope not.
Go ahead.
I have a question following on President Beerwagon's question. So is there a target that you would want to shoot for an agency like ours, or what you would try to strive for as a return?
Yeah, I think the goal, I always think in terms of duration for return, Director Peters, and I think a target duration for the district is probably a 2.7-year duration. That puts you sort of right in the middle of a 1 to 5 year strategy, and that gives you a reasonable return expectation. The sort of return expectation for that type of strategy right now is a 1.6%, which is the sort of yield on that 1 to 5 year index. And that's just based on sort of where yields are today. Like if we had to sort of buy everything at once today, it's sort of the target yield. Now things change, as we mentioned, the goal of having that target duration is that you sort of stick to the duration, and as things change around you, you hold steady to that strategy. And Jennifer was spot on when she said sort of we're looking at the long term.
Nice. That helps.
Before we go, is there any member of the public that would like to comment today or ask a question of Monique or the board or the staff concerning this discussion about investment? Star 9 on your phone if you'd like to speak today or ask a question. Okay, seeing none. Anybody else?
Thank you very much.
Thank you so much, Monique.
Mhm.
Thank you.
Thank you.
Hope you all enjoy the rest of your afternoon. Thank you so much for your time.
Thank you.
Gets back to Ringo Starr, asset allocation.
I don't even know what that means.
He had a song.
He's one of the Beatles.
Yeah,
Look how young she is.
the smart one.
Smart one. Okay,
We're break time.
we are early.
It's 4 p.m. time certain.
Yes, I know. That's why I'm saying, what do we do now?
We're not gonna go through this.
Well, that's what I thought too. It would be an opportune time to
Oh, we just signed Monique off.
speak to, well, just to go through her, policy changes. We have time and we're on the subject.
We certainly can. Monique's team did make the modifications. Monique did just sign up. So she did go through some of the investment policy review. So she, her team did the red lines. And so basically the modifications, to my understanding, were those to provide for compliance with the government code, a little bit more flexibility. And then as you'll see on the table, authorizing stable investments, it added in the supernaturals as well as the new asset backed, which can be some of those bundled loans and some of those types of things, as well as the shares of beneficial uses of a JPA, which I don't know that we would ever quite do that one. Some modifications to delegation of authority in section 30.35.5, and that is related to engaging in an investment manager. Performance standards.
I had a question about that one.
Yes, ma'am.
We redlined the continually, but it says it's.
Under what section are you on?
1.7.
Performance standards,
1.7. Oh, that's a good, I'm sorry.
3035.17.
Okay, yes.
Performance standards, yeah, the one that you were just on. It says-
Yeah, because we're not continually monitoring we are to the extent that we're monitoring as investments are made, but we're not, as staff, monitoring them on any kind of daily basis.
Right.
Right.
You know, I'm not watching the market monitoring our investment return.
That's what they're for.
Mhm.
Okay.
We have a professional doing it.
Yeah,
Right. Yeah.
Correct.
so we can sleep at night.
Yes.
Was this language, we find this appropriate, suitable?
Oh, absolutely. So the investment policy before it was even revised is modeled after, there's basically an association that provides, you know, the awards you get from GFOA for budget or audit. There's also one related to the investment policies, and this is modeled after that original, those canned policies. So from a policy perspective, we're fairly good. We're basically just doing a couple little updates to allow for the investment in the additional investment types that are included in the government code. That's that 35.9. And then to identify that we are utilizing an investment manager. And so those are the two big changes.
Mhm.
1.6, it says that we struck out will and put may issue quarterly reports. You know why that was changed? Because it sounds like we're committing to.
Oh, I think it's just from the may issue quarterly report within, because it's within 30 days of the end of the quarter, just sometimes with budget, with meeting schedules. I think it was just to give a little bit of flexibility there.
And will isn't a demanding word anyway, shall is.
Yeah.
So about the same thing.
Will and may.
Yeah.
Okay, just curious.
Jennifer, are you looking for action on this policy here this evening, or is this something you're going to bring back, or what's the status of this?
So this will be brought back. So most policy changes, we will be workshopping them, then bringing them back at a
Okay.
subsequent meeting for actual
Okay.
vote.
Yes.
Because these seem pretty simple and straightforward to me. I don't know what anybody else feels, but they seem, like very minor changes and appropriate given what we're about to do, so.
I agree.
Yeah, they're very minor in nature. From a board perspective, I think I can never say the word, fiduciary
Fiduciary.
responsibility, you should be most concerned with authorized and suitable investments and make sure those are
Right.
compliant with the government code, which they are.
Yeah.
Yeah.
Great work.
Yeah, really.
So bring it back when we can vote on it.
Yep.
Thanks.
Any further comments, questions? Okay, we will be taking a break until 4 o'clock.
Okay.
Okay, we're back for recess. For the second half of our meeting this afternoon, and that is Plan for Water workshop, starting with the Plan for Water matrix. Jennifer.
Thank you, President Beerwagen. So as the board is aware, this is the second half of stage 2 of the Plan for Water process, which is water rights. I do want to just complete a quick process check-in with the board and members of the public. We added a revised matrix to the agenda packet, and essentially the revision shows the risk category that was added in as stage 4. So upcoming, we will finish water rights hopefully today. Then we will go into watershed, which is intended to be one meeting, but as always, if the board or the public need more time, we can also add in a meeting, that's no problem. And then we will have risk starting, and then that will tee us in the strategic plan, which will be a little bit of a longer stage. We had one request through our conversations with the Foothill Water Network, as well as Circle, related just to a couple of process type things that I wanted to run by the board that I thought were great ideas. So their suggestion was, when we get to decision-making points, when oftentimes as the board is aware, we'll present information and then request a vote on some type of action. And so what we were thinking about doing is, it kind of mirrors our workshop format, in which we will present information, then ask for the vote at the next meeting. So you'll kind of see this offset of presentation, vote. And so it might be a little bit confusing, but I think we can kind of work through it and work the format out. So the idea being that once we kind of get into some of these heftier topics, that the board is not required to vote on something they just heard today, as well the public is not required to provide input on something to the board that they just heard today. So we're going to start kind of fleshing that out as we get into some more of the decision making, but I did think that was a good idea. There was also a request to essentially make a couple modifications on Zoom that we're working on working out. One was to make the attendees visible to everybody. And so in the meanwhile, right now, people at home, they can't see the list of attendees like we can see. And so for now, I will announce in the beginning and the end how many attendees there are. So we currently have 24 attendees on the meeting. You know, a handful of those folks are NID staff that are assisting in various matters with this effort, and the rest are members of the public. So we will continue to use the chat function, and then when we kind of get into strategic planning, we will be looking at doing some polling specifically related to the ratepayers for the constituency, as well as our stakeholders' interest in a variety of topics, including climate change, price of water, you know, running out of water, the environment, and kind of see to provide a little bit more information to the board. I know that we did do some polling in a previous effort, so we'll bring that information back forward too so that you can see that. But those were the big items that we had for process changes for right now. Is there any input from the members of the public, either on the revised matrix, something like they'd like to see in the matrix, or any other process type issue? The members of the public, you can use the chat, you can raise your hand. I think the chat's been working really well. Just remember one item. With the chat, please don't use it to chat back and forth with each other. Otherwise, it's very difficult for us to keep track of the chat. And then you can always make verbal comments. And I do see Mr. Feldman, you have your hand raised. If you'd like to unmute yourself, please go ahead.
Thank you. I was going to be chatting, but my question with the matrix is under the water rights that we're discussing, under outcomes, it has narrative and mapping for final document. Does mapping mean physical maps or procedural sequence? Could you define what mapping means?
No, I think it was originally intended to identify the specific point of use associated with each water right. So that would be an actual physical map as opposed to some type of process-based mapping. But if you have any recommendations for process-based mapping, you know, please let us know that as well, and we can try to accommodate that request. All right, so I'm not seeing any more questions, and members of the public, please feel free, as always, to use the chat, chime in whenever you want, and we will get to you as soon as we get a little break in the flow. So this afternoon, yes, ma'am?
I noticed under strategic planning that, let's see, it is under somewhere here. Okay, so under general comments, we have leverage previous effort, and I'm just wondering how much of this part of our effort is going to start fresh versus, and when you say we're going to pull in from previous effort, do we know what that means, what aspects of the previous effort?
Yeah, so I've been doing some research back on the previous effort. So the previous effort was prior to this current board being seated, as well as we have, you know, stakeholders that are participating in this process now. So my intent was for the previous effort to be provided. There was some polling that was completed, and Greg can speak to this more than I can. There were also several public workshops that did have some input that was obtained from the public. The idea is to bring that forward, but not to move forward from it.
Okay.
It's intended to inform what we're doing, but not serve as necessarily a basis for what we're doing. I do feel that it's necessary to revisit kind of all those traditional steps in strategic planning so that the board as well as the public have an opportunity to input for today's environment. You know, things change, and what we knew back then, which was what, 2 or 3 years ago, has somewhat changed in many ways.
Just incorporated into the bigger discussion.
I just wanted to make it available so it wasn't completely thrown away.
Yeah, okay. Thank you.
All right, if anybody else has any questions, I'm not seeing any, and so we are going to turn it over to we have one. Mr. Wallen, please go ahead and unmute yourself.
Yeah, I see you've added a whole session on risk. Now, something that I've been missing in the previous presentations, while I've been very informative, oftentimes in strategic planning, you do a basic SWOT analysis, which is looking at the present and the past. You look at strengths and weaknesses. Looking at the future, you look at opportunities and threats. And that could be a very useful approach to a risk analysis. In other words, it actually parses out various ways of looking at risk, particularly dividing it into past and future, strengths, weaknesses, those types of things. An example is the upper system. When that presentation was made, it was very informative, but it didn't necessarily inform the planning process unless you were able to see what are the weaknesses of the upper system. What are its real strengths? What are the opportunities in the future in the upper system, and what are the threats to the upper system? And likewise, the lower system, and likewise, even today's discussion about water rights would benefit from that kind of a parsing out of the various elements of risk. Anyway, it's traditional in strategic planning, and I think that might serve you well.
Yeah, thank you so much, Mr. Wallen. And we are planning on doing a traditional SWOT analysis. We will be, one of the first things we'll do when we start strategic planning is lay out the process for that stage, the process within the stage. So stay tuned, and I don't know if that's a good sign or not. I just threw my name off the table. Stay tuned, and we'll be bringing forth more information regarding the specific process related to strategic planning. And so not seeing any other questions. With that said, Tor is all things water rights to the district. Big kudos to Tor. He takes great care and personal responsibility for our water rights. There's a lot of responsibility associated with all of the reporting that goes on and making sure that we are in compliance with all of them. So I greatly appreciate your work. Tor is Sorry, I was reading a chat. Tor is extremely conscientious, and I have all of the utmost confidence in him as well as Chip. So big thanks to Tor. And we have a question in the chat that I don't believe I can answer at this time. We, the neighbors on Marsana Place and Peckley Road, believe we are next in line to bring water to our homes. Ms. Fisher, that is a comment, great question. I think that it is most conducive to ask that question offline. If you would like to email one of us, please do so. My email address is Hanson, HANSONJ, @nidwater.com, and I'll get a staff member to answer that as soon as we can. All right, thank you so much. Tor, take it away.
Board members, staff, members of the public, my name is Tor Larson, Water Resources Superintendent. I'm going to give an overview of our water rights, kind of where they're located, talk about all the information on them, and then open up to questions you may have. If we could advance the slideshow to part 3. That's going to be quite a few slides, so part 3.
Part 3, here we come. We went through all of this in March, or in February, right?
Yeah. Water Rights 101. Now we're going to move into the specifics of individual rights. All right, NID has a total of 53 water rights. We have one pending post-14 application, and we have 2 water rights pending transfer of the South Yuba Canal. 28 of them are post-14 appropriate rights. That one pending post-14 appropriate right is on the Bear River. And we also have 25 pre-1914 and riparian rights. The 2 rights that I mentioned that we would gain with the transfer of the South Yuba Canal are also pre-1914 water rights listed below, as you can see there. Next slide. NID's watershed consists of 2 watersheds, primarily the Yuba and the Bear River watersheds. We have additional water rights also in the Auburn Ravine area and the Ore Creek, Coon Creek area. So this is just a map depicting the Yuba River watershed and breaking out the components of that Yuba River watershed between the north, middle, and south. It also identifies the Dry Creek and Deer Creek sections before they join up in the upper Main and lower Yuba systems. And the area highlighted in red is the area NID has water rights within the middle Yuba River system. Of those rights, our pre-1914 or riparian rights consist of these three. The first two are riparian.
Sorry to interrupt you. Can we scoot the microphone up a little bit? It sounds like folks are having a difficult time hearing you. Is that better, Diana? Or Ricky? Ricky's probably the quickest.
Probably that one.
Okay.
All right, keep on going.
All right.
That might
We'll
help.
let Ricky nod her head whether that's better or not when Tor starts speaking.
Okay.
Does that sound better, Ricky?
Can you hear me?
Okay, perfect. Thank you.
All right. The first two rights are riparian rights, statements 10591 and 10592. They are on the outskirts of Jackson Meadows. One is on Pass Creek to the east, and one is called Damfine Spring to the west, that feeds our wood campgrounds. And both of those are for domestic use during camping season to provide campers with water. The third pre-1914 right there is for middle Yuba water to be directly diverted at our Milton Diversion Dam. It was established in 1854, and it covers consumptive use purposes of mining, domestic, irrigation, power, recreation, stock water, and fire protection. It takes us into the post-14 rights. Now, some of these rights are going to have multiple sources. If they listed the middle Yuba, I included them so I don't have to pick and choose which watershed it goes into. So you'll see a couple of these have multiple watersheds, but most of them are mainly the middle. The first two, applications 2275 and 2276 are a consumptive use and a power filing on the middle Yuba River, established in 1921, both for 60,000 acre feet of storage, the location at Jackson Meadows and Bowman Reservoir. You can see they have slightly different seasons. The consumptive use collection season is shorter, being December through July 15th, whereas the power filing is year-round. Yes.
I have just a general question of the pre versus post 1914.
Yes.
I meant to ask you before we finish this last slide, but on the pre-14 rights, there's no quantities associated with them.
That's correct.
Showing on these, you have CFS versus acre feet, whether it's a diversion or a storage right. Are there limits on our pre-14 rights?
So our pre-14 rights are limited to the amount of water that was used when they were established, so their capacities at the time, so any documented amounts. So we do have amounts that reference a certain amount of pre-1914 water. I can say from a generalized, because it's going to vary between the rights and the storage quantities as well. We have approximately 42,000 acre feet of pre-1914 storage and about 2,000 CFS of pre-1914 direct diversion rights.
How much direct diversion? I'm sorry?
Approximately 2,000 direct diversion.
2,000 CFS?
Yes.
And okay, but those aren't listed?
No, they're not listed.
Individual ones
No.
as you, but you know each one.
When we applied for the pre-1914 rights, we had to submit proof of the history of the rights we're applying for, documentation. We had to support those, and based on that.
But you didn't put them in our list like you did?
No.
Not.
Are they listed on your? No, they're not listed on your end.
Oh. Okay, I'm just curious. I mean, the other ones is pretty, in these ones, I just didn't know, because we don't know how much of each one.
Justin, maybe you could speak to this topic a little bit. Like, or, oh, there he goes.
Yeah, I'm sorry. I stepped away right at the beginning of the question, so I didn't catch it all. Would you mind rephrasing it?
Yeah, Justin, I was just, this is Director Peters. I was just curious on going through the post-14 rights, it's very specific on the diversion CFS and the storage acre feet of how much we're allowed to do. But on the pre-1914, there's no listing of what's allowed by right. And I wonder, well, number one, is there a limit by right? And Tor says, yes, there is. But why don't we note it? Because it's not, he said it's not noted, just notes it's not in IRWIM, or it's not in, or ERIM, or however they say that in water rights. But why don't we know how much is diverted or stored from each of these pre-14 rights?
Yeah, it's a good question, Director Peters. So keep in mind that one of the key differences between a pre-14 right and a post-14 right is in the ability to make changes to the water right terms with pre-14 rights without having to go through a process at the State Water Board. So for example, you can change the season of use. If you have a storage right and the typical season of use of a storage right is in the storage season, right? When you start receiving inflow in the fall, and then when inflow drops off after snow melt sometime in the spring or early summer. But in a unique water year where the water is available, you can make a change in the terms of that pre-1914 water right, so long as there's not an injury to another legal user of water. So I think the volumes that Tor provided are good kind of ballpark figures, but
Didn't provide
We provided total volume.
Okay.
but changes could be made to those, and it's a case-by-case type analysis to make sure that there's no legal injury, and so on.
So as long as with the collective, all of our pre-14 rights, we have to show we don't take more than 40,000 acre feet for storage or 2,000 CFS in any given year? Is that how it works?
42,000 acre feet of pre-1914 storage. And yes, the pre-1914 rights, we can document over 2,000 CFS of usage.
So our only requirement to the water board, I'm just trying to get this straight, our only requirement to the water board is that collectively of our 23 pre-14 rights, collectively, we haven't.
Not collectively.
We don't collectively.
It's not collectively.
We report on the right itself.
The
So
individual
each right,
Yes.
we report on annually.
I think, Director Peters, is your concern primarily related to the values not included in the table? Because that's easy to do. We can just go ahead and
We
do
can
that.
put in.
But you do need to note, as what Dustin stated, is that you can increase your use as long as you don't,
Harm.
it does not result in harm, and you can substantiate that fact.
Can't do that with post-14.
No,
That's defined.
no, they're much more restrictive. It's just a difference in the type of right and how it's illustrated on the table, but it's easily to be reported. We can show you that by right.
The 314 right is not a firm amount, it is movable, but it is based on our historics, and we base a lot of that on what we've historically done. We also applied to the state, showed the state the proof of what we've historically diverted in these locations, so they're well aware of the amounts. But that's the reason why it's not locked in a table, is because it's not necessarily a firm amount. It can be moved.
The time of use and everything can be used, and if there's more, we can use it.
Yeah.
But we would have to report that we use more.
Correct.
Correct.
Yes.
At the limit, the base, it does the baseline, or the lower average year limits or something. That you report on.
We report monthly diversions or storage.
No, we report actual diversions.
Okay. But they have to stay within these certain parameters unless it's an excess year.
Not necessarily, as long as it doesn't cause harm.
Okay. I just noticed that these were very vague and these were very specific, and so
I think it's more of a reflection of one can change and one cannot.
but as they're established, just know what they're, if you could update it just to show what the base, what established, some to those numbers.
Okay. We can do that.
Thank you.
I have a question, Tor. I heard you say twice, use the word consumptive. Can you define that more clear, what that differentiates?
Okay, so consumptive uses are for what it sounds like, consumptive for irrigation or agricultural, domestic, municipals.
Okay,
Or your non-consumptives are power filings, they can be other things as well. Typically ours are power.
There's a difference just.
And
in
flows,
power and water.
yeah.
Okay,
And-
thank you.
And that leads me to another general question. On these purposes and uses, the basin plans have additional purposes on uses that these were established quite some time ago. And the basin plan does have environmental uses, in stream or just environmental as a beneficial use of water. Is there, and none of these show that there's any just for environment, is there any way to, is the board, or have you, is there any way to add that, since that is a new?
No.
It would change change petition and a redo of our water rights.
Right.
And it would be a very lengthy process.
The beneficial uses are identified by water rate are those that were issued with the original. Remember, we go through the water right permit application and then the licensing of the project. It's listed on the license that was issued for the project and the right that allows us to use it. It's not, we can't just unilaterally change that and add the environment to it.
Seems like the water board may be moving that way, and they just recognize additional beneficial uses that are on any water right.
Yeah, I think that we're somewhat, but we're kind of conflating two different things. There's beneficial uses identified on our water rights for which we can utilize those water rights and those diverted waters for, and they're specific to the point of diversion and the actual permit that was issued. So for example, if it says power and ag, you can only use it for power and a consumptive use of ag. The beneficial uses are associated with the basin plan are identified through the basin plan to then establish a framework in which water quality standards and water quality objectives are identified to protect that beneficial use, whether it be spawning, cold water habitat, kayaking, whatever the beneficial use is. It's a little bit, we're kind of conflating two things. So as the water board adds beneficial uses to the basin plan, it doesn't modify our water rights. What could potentially modify our water rights is if the water board identifies that there needs to be some new water quality objective or new water quality standard that is then needed, so a water quality standard is like a numeric objective, so think of pH or temperature or something like that, where a water quality objective can be more narrative in nature. And so say they said for cold water spawning habitat, the temperature needs to be X and this amount of flows needs to be in. That could potentially impact our ability to divert water through needing to meet more unimpaired flow standards to meet this new beneficial use or whatever they came up with through the basin plan amendment. But they're not completely together, right? They're two separate issues.
Yeah, I understand.
But Dustin, as the water attorney, can probably speak to that better than I can.
Dustin, so I'm thinking about these voluntary agreements, we're talking, that there's been talk of voluntary agreements to allow water for.
That would be through a basin plan amendment, and that's separate outside of our permit.
So how does that affect these water rights? If we're not allowed to give any water, how can we use our water to?
Yeah, I can try to answer that, Director Peters. So keep in mind the basin plan amendment process is usually done in stages or phases. And the early phases are just the physical act of amending the basin plan. And in the case of phase one of the Bay Delta Plan amendment, phase one, remember, relates to the San Joaquin River tributaries. The plan was amended to require an unimpaired flow objective. And but that's just words on a paper. It is not self-implementing until a later phase when the State Water Board then implements the amendment. And historically, that implementation was done through a adjudicatory type process called the water right proceeding, where it's like a trial. All the water right holders are noticed. They're invited to participate, provide evidence as to which water rights ought to be conditioned with the new water quality amendments, the basin plan amendments. For phase one, that amendment has been enacted, but not yet implemented. For phase two, which is the rest of the Bay Delta watershed, including NID, they have not made any amendments yet to the basin plan. So there's still nothing to implement, no change to implement yet. One final point, and this is important to keep in the back of your mind, is that the Water Board is saying, really for the first time, that they're considering implementation of amendments through a potential legislative process through an adoption of a regulation. So rather than doing an adjudicative process where you have opportunity, due process, opportunity to object or present unique circumstances as to why unimpaired flow is damaging to your water rights, the Water Board is indicating they could legislatively adopt a regulation that would apply to all water right holders. So, back to your question, Director Peters, that if that were done either through adjudicative or legislative process, the effect of that is to add a condition on your water right. In this case, to implement unimpaired flow. So in effect, it does modify the water right, although it's done by the State Water Board initiative, not through NID's initiative.
So they would have to modify the water rights because there's no unimpaired flow purpose or use for any water rights currently. And so if they did it for unimpaired flow, could they also do it for environmental benefits, like cold water or, that kind of thing? Could they allow water rights to be modified with the purpose to do other things in these identified purposes that are currently underway? Does that make sense?
Yes, and that's correct. The basin plan will be amended, and it will be amended at some point by the State Water Board in a way that affects the rest of the watershed, including NID. Whether that's unimpaired flow amendment or some other amendment is to be determined, I guess, at this stage. But again, that the amendment itself is not self-implementing. There's then another legal process, whether it's adjudicatory or legislative, to be determined. But there's this other legal process where the amendments, whatever they may be, are then imposed or implemented on water right holders. Currently, the current basin plan, as it exists today, only obligates the water rights for the Central Valley project and the State Water project. That was a deal that was struck. It's called Phase 8 for those that are in the weeds on this. Back in the late 1990s, early 2000s. And it's been that way since. And the change that is being discussed and that was implemented in, at least as to phase 1 of the Water Quality Control Plan update, is considering a more broad application of basin plan amendments to a broader set of water right holders and not just the CVP and State Water project.
Just so to clarify, Director Peters, is your question, can they add one of the beneficial uses of any one of our specific water rights, add environmental water to it?
Right.
I think that's what her question is.
Or just saying, can we expand our purposes to include this?
We could not expand our purposes to include it, Dustin. So I think that the question is in the early implementation of the phase 1 entity, do they actually go back and modify their water right permit? And it says now power, agricultural, and environmental water?
Yeah.
I don't think of that.
No, but it becomes a condition on the water right. So the effect of the action is exactly the same. There's more water in stream for that beneficial use, but it's not really a amendment to the water right. It's a condition on the water right, is how I would describe it.
Right, and so I think it gets back to, and Director Peters, correct me if I'm wrong, the last meeting we had, you had a similar question that I think was along the nature, could we use our diverted water simply for environmental uses? And I believe at that time, the response was, no, that's not currently a identified use, except for the fact that we can just let our water go out of storage, right? But we won't be able to claim it as a beneficial use of it. Can you speak to that, Dustin?
Dustin, yeah. Clarify
Sure.
that.
Yeah, nothing requires the district to either directly divert or divert to storage. It's called forbearance. You can forbear a diversion. Now, you run into some concern. Obviously, you'd have some water supply issues, impacts potentially. You wouldn't be selling that water to customers or running it through your powerhouses necessarily, so there may also be some economic impacts. But in theory, you could forbear. Nothing legally requires you to divert, at all times in accordance with the terms of your water rights. That being said, there is a principle, and I think we discussed this briefly at our last session, but there is a principle under California law known as forfeiture, where if you do not utilize an appropriative right for 5 consecutive years, there's an argument that you have forfeited your water right. So, in addition to economic, impact, water supply impact, you would not want to necessarily do this for 5 consecutive years for fear that somebody could say, aha, you now forfeited that water right or some portion of it. So, much better to, if there's an interest in the district in enhanced in-stream flow, it's much better to package that transaction as, in effect, a water transfer. A water transfer is considered a beneficial use. You find a quote unquote buyer for that water. There's an exchange, business terms associated with that. So you dampen any economic impact to the district, and then you see the benefits of enhanced in-stream flow for the environment. And that, in essence, is what is being discussed as at a very high level for voluntary agreements, that it is a water transfer to the environment for compensation.
Yeah.
Like connecting floodplains back to the rivers and that kind of thing, to be able to get water into the ground, or just general environmental enhancements to improve.
Yeah, and I, if I can jump in here just real quick, one of the challenges we run up against in the local perspective of this is many customers have asked to buy NID water for the sole use of putting it into their local creek through their yard and running it through their yard and wherever it may go from there. That's where we run into a challenge, in that we are not authorized to sell our stored water specifically for environmental purposes, just to put into a creek and send it on its way. That's one of the challenges we've run up against. So hopefully that clarifies a little bit more.
I just want to clarify, I was just curious.
And one thing, just so I know this topic gets a little bit confusing because there's a lot of different moving parts and different pathways. So the basin plan amendments and the concept of unimpaired flows is separate, but a little bit connected to the VAs, right? They're two different separate and regulatory pathways when taken together would support the beneficial uses. So just make sure that we're clear on voluntary agreements are a little bit different than the proposed pathway of basin plan amendment and unimpaired flows. Okay. All right. Try.
So, hey, Dustin, Rich Johansson, so if a condition was put on our water rights for environmental use, we all know that water in California is a zero-sum game right now. That's going to take water from other uses that we're also supporting the environment. So is there a CEQA document involved in that, an EIR? How do you balance competing environmental uses?
Yeah, it's a good question, and welcome to California water, because anytime you talk about making changes, it involves trade-offs. And if you take water that was formerly used off-stream and rededicate it to in-stream, then you have terrestrial, obviously the consumptive use, whether it's ag or urban, you've got a concern there. Then you've got potential for terrestrial impacts. There's a lot of terrestrial species, plants and so on, that rely on our off-stream diversions and water uses. And then you have things like wildfire mitigation that you need to consider. So anytime you touch water, you make a change, you need to consider the trade-offs of that potential action. So in NID's case, the most significant change on the horizon is your new FERC license, which Tor and Chip could speak more to the details of this, but it's going to be a significant change in your operation when that new license is issued, and it will require a greater dedication of in-stream flow or bypass flows to downstream in-stream uses. And that was analyzed under the NEPA. There was a environmental assessment prepared of that action. So there has, in NID's case, there has been an environmental review of that.
But that was done not under these extreme drought conditions. And how should I put this? Was there a way to measure the benefits of increased in-stream flows versus diminished amount of water going on our agricultural land? And I don't see how you measure that, but I assume there would be, and I don't think the two balance out well. I think what we lose on the agricultural lands and and we have world-class wildlife habitat on these ag lands, especially in Nevada and Placer County. To lose a part of that or most of it is going to be an environmental disaster. Then you couple that with not having a green belt and extreme fires, and that has been one of the biggest push for climate change. Some of these fires, it's like the Amazon on fire.
All right. Do we have any other questions? All really good comments. I know it's a heavy subject because there's deep care and responsibility for the district. So I think it's a good conversation. All right, we ready, Tor?
Continuing in the middle.
In the middle, Yuba.
We have applications 4309 and 4310. They are non-consumptive power filing for power that is generated through the Drum Canal and South Yuba Canal, currently PG&E canals, but it's with the water we're bringing across the system from the Middle Yuba, Canyon Creek, and the tributaries that come into our Bowman-Spalding Canal along that stretch before it's emptied into Lake Spalding. Application 5193 is also a Middle Yuba right that allows for collection of water to storage. Season is broken up a little bit from October 1st to December 1st, and then again from January 1 to June 30th. Your places are listed there at Jackson Meadows, Bowman, Scotts Flat, Rollins, and Combie, and it's 50,000 acre-foot allowed storage amount per season is listed there. For recreation, domestic, and incidental power purchases, as well as irrigation. The next two rights listed, 8177 and 8179, fall along our Wilson Creek. Wilson Creek is a very small tributary to the Middle Yuba River. It comes in just below the Milton Diversion Dam. We have a diversion on Wilson Creek, and those two rights cover both consumptive uses such as irrigation, domestic, and municipal, as well as a power right. Their seasons are slightly different, and their rates of diversion are slightly different, but they both allow 680 acre feet of collection to storage each year. Below that is application 20072, which is another power filing on the Middle Yuba River, season of October 1st through June 30th. And the place of storage is again in the upper two, Bowman and Jackson Meadows. Okay, once water is moved from the Milton Bowman conduit into Bowman, we enter our Canyon Creek watershed, and the area highlighted in red identifies where this watershed is for NID. We have a number of pre-1914 rights. These are some of the older ones, some of the first reservoirs in the area. The French Lake, 1859, as well as Jackson Lake at the bottom, both 1859 rights. When those reservoirs were established, they are for collection to storage, for domestic and consumptive uses. Sawmill, 4716, is also a consumptive use right, as well as Bowman Lake for statement 13800. Foshery is covered under 13801, and we have a power filing as well on Canyon Creek under statement 14356.
So I have a question about those. Those were established water rights by previous owners, so they were acquired by NID to purchase from them.
Correct, that is correct, yes.
And made the same water right, only it was transferred in.
Right, so the chain of title and the ownership as it passed through, and once we acquired them, these trace back to these dates. The main purchases came from the Eureka Lake and Yuba Canal Company, the Empire Mine Investment, of course, PG&E, and the Excelsior Water and Power Company in the Deer Creek system.
And Director Heck raising her hand.
Thank you, guys. I'm fascinated because on these Canyon Creek and then the Jackson Creek, they include fire protection as the purpose. And maybe I'm confusing the purpose of the water right as opposed to beneficial use, but I did not think that fire protection was thought of as a beneficial use, as odd as that sounds. Do I have that completely messed up, or what can you say about that?
No, back in the pre-1914 water right times, they were uses for fire protection. It's not a beneficial use now.
Okay,
but it
huh.
was, for those rights. They use their water for fire protection as well.
Okay, so post 1914, there is no fire protection as a beneficial use, or did that come later?
No, it's from the post 1914.
Wow.
There's no benefit for us for fire protection.
Okay, well, thank you for clarifying.
Post rights in the Canyon Creek area include application 1270. This includes Jackson Lake, Foshery, Sawmill, Bowman. You can see their amounts that they're allowed to collect to storage each season, and the storage seasons are year-round on those. There's also direct diversion rights associated with that application. Canyon Creek via the Bowman-Spalding Canal or conduit, as well as Texas, Fall, and Trap Creeks that come into the canal along the way. Below that, we have a power filing 2372. It's very similar to 1270, but it covers power generation only, non-consumptive uses, and their season of diversion is year-round compared to the consumptive use rights, which only covered April 15th through September 30th. You see the amounts to storage as well as diversion amounts on those. And the final one is a power filing for Bowman Lake, application 27559, allows for 65,000 acre feet of collection to storage and power generation at a rate of 322 CFS year-round.
On this one, does The one on the bottom?
Yes.
It notes the priority date, but it is no license. So that's one that's still.
It's a permit.
It's just a permit.
It's in a permit status, yes.
We haven't done the final to get it, licensed.
All of our 10 remaining permits have pending, change petitions in to get them in a process that's, suitable to license. So we've had the state review, do analysis on our water use for the 10 remaining permits. There are some things they came up with, such as, place of use changes or purpose changes to comply with current operation, or facility changes, where maybe a point of diversion is no longer needed, based on operational use. Those type of things need to be updated. So we have, I believe it's 27 change petitions in, covering these 10 permits to get them in a position that would be ready to license. And we're waiting for the state on that.
So when did we turn those in, or how long has that been? From 1980?
It was initially filed in 2009. We amended a piece in 2019 to include incidental power for a potential Loma Rica hydroelectric project. The state was only willing to do the 5 applications that contended with the Loma Rica incidental power purpose and address those. At the time, they said they weren't willing to address the others. And
Weren't there protests filed? Dustin, this came up as actually a question I received yesterday. Weren't there protests filed and some of those protests were settled, but the remainder were not?
Yes, that is correct.
So this is a topic I think we'll have to revisit. I think based off of some previous board direction, the idea was to let everything sit as it, so it comes through as a package. But this just came to my attention recently, so I'll talk to Dustin. Doesn't appear that the board is very well versed on this issue either. How about, staff will provide staff will provide a separate update, once I kind of wrap my hands around it. I was just asked the same question, by Foothill Water Network as well as Circle yesterday. Their understanding that, there's only 2 remaining outstanding protests that were settled, the remaining were settled. I'm unclear as to what was going on before, so let me kind of dig into this with Dustin and staff.
Yeah. We did make a lot of progress and came to conclusion on a lot of them and pushed them to the state for authorization and moving forward. But that was about the same time all the concern over 401 permits for licensing came up, so I think everything was got
Solved.
So that's kind of where we sit.
We'll dig it back up and we can report out.
I'm interested.
Could you clarify, or briefly, I don't want to keep jumping in here, but the difference between a permit and a license, and why?
so a permit.
What's the history with that? I don't understand.
So a permit is the authorization to develop a diversion and use plan, and the license is a vested right that you have demonstrated the use of that water.
So that demonstration could go on for years?
You can file for an extension of time if you don't feel like you fully maximized the permitted value. Once water leaves the Canyon Creek section out of Bowman, it goes into our Bowman-Spalding Canal. And along that, we have 5 tributaries that come into the canal where water is picked up on, the Texas, Clear, Fall, Trap, and Rucker Creeks. The area in red kind of identifies that region. It's also important to note that PG&E also has water rights through this region, as those upper reservoirs in there are PG&E reservoirs, and they have water rights, pre-1914 water rights in that area as well.
How do you balance post-14 rights and pre-14? I mean, if it's a small little watershed area, they have pre-14 rights, you say, and we
Yes.
have all these post-14 rights. How do you coordinate that?
Well, it's a challenge because we don't know how PG&E is operating all the time, so we can only report what we are seeing. We do have an agreement with PG&E that they do receive, a certain amount of water in the Bowman Spalding Canal, and that would be the pre-1914 water that comes down into that system. They own the, Texas Fall Creek system before we expanded it for the full canal.
Is that through the cooperating agreement?
Yes, so we have a coordinated cooperating agreement that, that's kind of hammered out the details, and allows, a certain amount of water, that is designated to PG&E, and then anything above and beyond that, NID can claim, and it would be under post 14 filings.
And the water board's not involved with that at all,
No, PG&E files their own rights.
but they're pre-14, so they don't have to,
They still have to file.
they do have to.
Yeah.
Still report.
14 rights you still have to file on,
Okay,
yeah.
and then we have a separate agreement, they say, okay, this is all we're gonna take, and anything about that, you can.
Yeah, we are commingled. We are gonna operate this way to satisfy your rights. They're okay with it, and then we would operate, the remainder as our post 14 rights.
There's a timing issue, and there's all of that that's hammered out in that agreement.
It's the first, set amounts per year that they get.
And this allows them to store water in Rollins, it's the same agreement, correct?
Yes, the same agreement as the
Question about that
provision
one
to
too,
store
yeah.
water.
Yeah.
So this is all fascinating reading in the history book, how this evolved, and how it goes way back to the beginning, the beginning of NID, this whole deal with PG&E and the water, it's really fascinating to read.
Where's it at?
In the book was,
In the history book?
yeah.
Yeah, the coordinated operating agreement, it is somewhat complex, and then it handles a lot of different issues in one particular agreement, including our ability to purchase that additional water.
Right.
So,
And these teams meet on a weekly basis to talk about the water, how it's moving through the system and how to account for it, because it is very complex and it deserves at least a weekly meeting, if not more often.
Yeah, I have a question about the Rollins, but I'll wait till we get there too.
Okay. The rights along, the tributaries to the Bowman Spalding Canal are listed here. You can see application 6701 and 6702, cover Clear, Fall, and Trap Creeks. They were established in 1930, and, the diversion amounts are listed there, as well as seasons. You can see that the seasons for power are longer than the seasons for consumptive uses, for irrigation. 8178, 8180 also are, rights on these tributaries. They include all the tributaries. 8180 is both a direct diversion and a collection to storage right, so it allows for collection to storage at Scotts Flat, Rollins, and Combie as well.
Why are all, well, there's four on 8178, there's Texas Creek, Clear Creek, Fall Creek, and Trap Creek. They all have different diversion time frames.
Yes.
What would that be?
It's based on division analysis of the water right. It may have been the permitted terms originally before it was licensed. And those were the periods that were permissible for those diversion times. It could have been affected by other entities such as PG&E or other water users that allowed for those certain diversion times, but those were set in the permit period.
Okay.
And 8178 is licensed. 8180 was withheld. It was asked to be included in the lower division analysis, which is the piece that was completed in the mid-2000s.
They didn't try to make it complicated.
Good job.
Once water moves its way across the Bowman Spalding Canal, it's dropped into Lake Spalding, which is PG&E's reservoir. That becomes the South Yuba watershed, where NID has a couple of rights, and you can see the area highlighted in red that would allow for NID water rights to be collected under. There are four of them, two pre-1914 and two post. The pre-1914s are for water from the South Yuba River to be captured and diverted at the South Yuba Canal and the Drum Canal. The priority days you can see is 1874, and the purposes are listed there on the right. The post-1914 rights, there are two of them. Application 15525 is a power filing. So water diverted at Lake Spalding for power use. maximum amount 200 CFS, and the diversion season of September 1st through June 30th. There's also a consumptive use filing for collection to storage and direct diversion of South River water under 20017. Allows for 18,000 acre feet of storage between Rollins and Scotts Flat. Its diversion season is the same as the power filing, and its storage season is November 1 through June 30th. As we move out of Lake Spalding, one of the canals, the South Yuba Canal, brings water into our Deer Creek watershed. The area highlighted in red is kind of the area that NID benefits from water collection within the Deer Creek watershed. Also important to note that most of that water collection is the top third up by Scotts Flat. We have a few canals, the DS, which is just below Scotts Flat, the Newtown, the Tunnel, and the Keystone that can divert natural flows below that point, but most of the water is collected and stored at Scotts Flat for obvious reasons, and that's where most of our storage comes from. Most of our collection in the Deer Creek watershed is the upper third.
Is it natural flows into Scotts Flat Reservoir, or?
Yes. Yeah, capturing flows into Scotts Flat Reservoir, so everything up above it.
There are tributaries to Scotts Flat.
Yeah. Pre-1914 rights in the Deer Creek system. We'll start with statement 12-949. That's our Keystone Canal that comes out of Lake Wildwood. It's about 1.2 CFS. It's a real small diversion. Feeds a couple customers, and at the very bottom portion of our collection area within the Deer Creek watershed. Application 12950 is our tunnel canal that comes off the Deer Creek just above Lake Wildwood. All these things were either established, basically in the early 1850s. These are some of the oldest rights that the district has. Back to the mining, that's originally why they were using them. But 1850, 1851 is the priority dates. You can see the Newtown, the DS as well, consumptive uses and then purposes at the time for when they were established. The Cascade Canal has a priority date of 1857. That comes off just above Scotts Flat Reservoir, so it's taking advantage of the upper portion of the watershed. And there is a power filing that's both pre and riparian for Scotts Flat, those purposes listed.
So the only one that has storage is the Scotts Flat.
It's a direct diversion, it is not storage.
Sorry?
It's a direct diversion only, it is not a storage.
Okay, this is, okay, place of storage diversion.
Yes, so when you take water at a point and move it through, it's called a place of diversion or storage. So if we move water for power, we're diverting water, but we're releasing it right back into the Deer Creek. So it's listed as a point of diversion storage. That's the place at the point where the movement of water for those purposes occurs, but it's not a collection right.
Okay, so no storage actually?
No, there's no storage at Scotts Flat.
Okay.
No pre-1914 storage.
Okay. Wow.
Application 1614 is our collection to storage right for Scotts Flat. It allows for up to 60,000 acre feet of storage, established in 1920, and it's a year-round collection season. Application 1615 is a direct diversion right. There's one typo on here. This is one of the things we spoke about earlier about having these change petitions. There used to be the Rough and Ready Canal that diverted directly from Deer Creek. Through changes in our operating systems, we now divert water through the DS Canal that feeds those systems, so the Rough and Ready diversion isn't needed. So one of our change petitions is asking for the removal of the Rough and Ready as a point of diversion because it's no longer a point of diversion. The 4 points are the Cascade, the DS, the Newtown, and the Tunnel under that right. And then there's a power filing, for Scott Spot Reservoir as well, 27,132. 60,000 acre feet of storage, can be collected year-round.
On the one where we deleted the Rough and Ready Canal, so now with this 100 CFS, we can put it, we get to pick how we divvy that up.
Yes, yeah. Your maximum diversion rate between them is 100, correct? And that's of Deer Creek water alone. That's not counting imported waters from other sources. Okay, moving down the other corridor from Lake Spalding, we enter the Bear River watershed. As you can see, the outline here identifies the area within the Bear River watershed, and the highlights in red show where NID captures water within the Bear River watershed. Once it gets past those points, NID can't capture any of that water, like it's down to South Sutter. All right, for the pre-14 riparian rights on the Bear River, we have statement 13809. It's pre-1914 right for our Combi Phase 1 canal for domestic purposes of irrigation, mining, stockwater, and power. Application statement of use 13926 is the diversion off of Wolf Creek. That comes off of just below Grass Valley there. That's off Allison Ranch Road. Established in 1859, and it feeds our tar canal for the listed purposes.
Find what stock water is?
I'm sorry?
Stock water?
Stock water is water for livestock.
Okay.
Stock ponds,
Pond,
drinking water.
for stock, for livestock. If it's collected in ponds on site,
Not
Some
necessarily.
are,
or just?
or
Just for watering animals,
Animals.
straight watering
Yeah.
animals.
People who have livestock to water the livestock.
Okay.
Statement of use 14354 is a power filing on Rollins. 14355 is a consumptive use right for the Bear River Canal. And statement 16095 is a riparian right only, not a pre-1914. The riparian right for the Combi North and Combi South powerhouses to pass flow down the river.
There was a powerhouse up Rollins in 1853.
No, there was no powerhouse there, but it has pre-1914 and riparian rights to it. So the power for the riparian portion, you can just pass water through for a use of power with the pre-1914 water.
But we're not storing it, though. It's just.
No, that right is not storing.
Only when it's spilling.
Hopefully prior to, so we're generating with it, but yeah, passing water through the system.
Run a river.
Yep.
Or even when we're irrigating, we can count that? As long as water's coming in, we can count it.
We are, under the riparian portion, as long as we're not curtailed, we can generate power with it and then downstream potentially use that water. Right, because that's Bear River natural water, and then as long as we're not under curtailment by the state, we have pre-1914 diversion points below that power generation that allow for the use of that water.
How do we measure? Do we have a measurement upstream to know how much of the Bear River water is coming in?
We have the reservoir we measure for storage. We have measurement points above, but it doesn't include all the tributaries. So we measure the water along the Bear River Canal, I'm sorry, not the Bear River Canal, the Dutch Flat Canal and the Chicago Park Canal. Those are run-of-the-river power generation only. They take the water from the Bear River, run it through, power generate, and put it right back in the river. Both of those dump into the Bear River above Rollins. We measure the change in storage at Rollins, and we know what the releases are. We also know what the imports are through the Drum Spalding system coming down. So that way we can determine what kind of natural is coming into the Bear River.
in through the Bear River to Rollins.
And the naturals would include Greenhorn and Steep Hollow.
All of them, yes.
Huh.
We're deducting what the.
Yeah.
Yeah. So we we measure what's in the Bear River at Dutch Flat. We know what's going through Chicago Park and into Rollins.
We do know what we're bringing through, yes, the import portion, we measure the storage at Rollins, and we also measure our releases and diversions, below. So there's the Bear River below Rollins gauge, I think, people are pretty familiar with.
Yes.
It's right below the bridge.
Yeah, we're below the bridge there, and then there's also, right next to that is PG&E's Bear River Canal, which is at the tail race of the Rollins powerhouse, which brings water into the North Auburn area.
And that was my question about this, because I know that in the, tech memos, in the supply tech memo that HDR prepared, they said that PG&E has, rights to the first 350 CFS through Rollins, into the Bear Canal.
That is part of the coordinated operating agreement. That's one of the many components of it that we've had to work with, because PG&E does have senior rights in the Bear River. So commingling of water, we had to come to an agreement, and that is the agreement, that they get the first 350 CFS of natural Bear River water as long as they can take it into the Bear River Canal.
And so, and we measure it by this deduction method between Dutch Flat and.
Correct. What's imported, we know what's imported plus the change in storage, and then measure the releases. And then we know what's in the Bear River Canal as well. So we can, if that doesn't, for instance, if the Bear River Canal is at 200 CFS, but natural flows are reporting 350, PG&E would only capture the 200 CFS because the only place they can use the natural flow is in the Bear River Canal. The other 150 would then default to us.
Do they also have storage rights in Rollins?
They do not have storage rights. We grant them rights to use our storage in Rollins.
Remember on the
Yes,
storage report we send, and how you had the
Yes.
question related to PG&E's capacity in Rollins? That's when they're.
Does that count towards their 350 CFS? Can
We
they
cannot store natural water. It has to be passed through the Bear River Canal.
So that's a separate thing completely?
Yes.
So they get more than 350 CFS. If Bear River doesn't
If
have.
their storage is below their 10,000 threshold, they can import more water from Lake Spalding and store it at Rollins up until the 10,000-foot threshold, or our unused space later in the season.
And they're essentially using our storage in Rollins for their outage.
Correct. So they build up their storage, so when you see the number go above 10,000, that's because they have the Bear River, or they have the drum outage that runs, so the canal that feeds Spalding down to the Bear River. It's a 3-week outage, and they need to make deliveries through the Bear River Canal to PCWA and ourselves down below. So they need to bring in more water at that point to be able to sustain the deliveries during that outage. So it's typically around 15,000 acre feet they need to get up to. Sometimes they get a little higher.
So do they pay us for that water?
It's part of the cooperating
It's their
agreement.
water. No,
It's their water.
We allow them, because at that point of the year, we're drafting on our storage. It's late, it's September. We have drafted on our storage, so Rollins has come down to.
Using the water.
As well, to allow them to store more for recreational purposes. They
So
keep
then
everything up.
You'll see when we start getting to the time of the year when we can start diverting again, and we need the storage, they're starting to reduce their storage. So that's part of the cooperating agreement. So this is all tied up in their weekly meetings and that agreement.
This is why there's a weekly meeting.
This is why there's a weekly meeting, right? And this is why we have a tour. We need a tour to watch all of this very closely for us.
It's one of the most complicated systems in the country.
And this is why it does
Just-
speak to FERC claiming we have the most
That way.
complicated system in the country.
So it's more of just an agreement. They're not buying their storage, that water.
And keep in mind,
Yeah.
they're utilizing our facility in Rollins, but we're using many of their facilities upstream. It's a share and share alike type of.
Mm-hmm. And PG&E paid for Rollins
No,
originally.
no, we got a bond.
No.
No, we got a big old bond.
They covered us in the bonds for
Yeah.
the Bear project, yes, that's fair.
That's fair. I mean, we couldn't have done it without them.
Yeah.
We're closely connected to.
No, I was just trying to, it's just a tangled mess.
It is a little bit.
But it works.
Yeah.
Not to tour.
How's this work? He has this untangled.
Onto the post-14 rights in the Bear River watershed, we have applications 2652A and 2652B. 2652A consists of both Combe and Rollins for storage amounts and the seasons to divert for consumptive uses. 2652B is strictly for Rollins Reservoir. 5634X, that is the application we have pending with the state for the Centennial Project.
And on that one, I've heard the number, Jeff Litton has mentioned a few times, it's 220,000, and some of the water rights mentioned 220,000 acre feet versus the 110 storage. Can you speak to that at all?
It's probably talking about the full state application.
Combined use, combined as a direct diversion and storage.
But we're not requesting the direct diversion, we're just requesting storage.
It's in there. It just doesn't list the combined use terms. I'll get to that eventually. All of our rights have many complicated things between them, so I didn't want to do it for every single right. I will do a brief discussion on one of them, but yes, it's a combined use term of direct diversion and collection of storage can't exceed that amount.
And so in this 5634X, we're requesting both.
Yes. We are doing for the consumptive uses. Below that, we have application 6229 on the Bear River. This is a post right on the Bear River Canal. We're allowed up to 120 CFS in the Bear River Canal, and that's also identified in our coordinated operating agreement with PG&E. And season covers April 1st to October 31st. The next two applications, 20151 and 20152, we spoke about briefly. It's the Chicago Park Powerhouse and Dutch Flat Powerhouse. They're basically run-of-the-river power filings that allow for us to divert the natural flow of the Bear River, generate power with it, and then release it back into the river. And both of those ultimately release into the Bear River above Rollins.
I thought at Dutch Flat it goes into the canal right there.
So there's a diversion. It starts out of Spalding through the drum system, and it comes through the drum canal and into the river, and then there's two diversions at that point. So there's the Dutch Flat 2 canal, which is an Eddie's canal, and then the Dutch Flat 1 is PG&E's canal. So there's two canals that water can go down through that section. After that, they go into the Dutch Flat after bay, and that's where the Chicago Park flume takes off along the
So
side.
it doesn't all go back into the river, part of it goes into the flood.
Well, it goes back into the river, into the after bay, because that is into the Bear River.
Okay.
And then it's re-diverted again at Chicago Park, generated again, and put back into the Bear River above Rollins.
Does it have the capacity to use both those flows from Dutch Flat to the Chicago Park?
I'm sorry?
They use both of those flows from Dutch Flat?
It depends how much water is flowing. So, if there's enough to support both, then yes, otherwise, it can't be just one, and one's not being used at the time.
So which, does the river take precedence over the canal?
It all makes it back into the river, and there are environmental releases through that section that require a certain amount of environmental water through there. This is in addition to water being imported from Spalding.
And on the Bear River Canal, it says we have 120 CFS in it. Is the capacity, the total capacity of that canal 450, is that correct?
It's, I think this says 492 is the listed capacity. 470 is considered full. Between 470 and 428, that's their full range.
Okay, and so we have 120, they have 350, and then the remainder is PTWA?
Well, no, that's theirs. PCWA doesn't have capacity in it. PCWA purchases PG&E water through that system.
Their only water rights are on the American.
Okay, that's okay. Thank you.
As we continue down there, we're getting into the power filings. Again, a post-power filing for Rollins Reservoir 4983. It allows for direct diversion and collection to storage. And then there is a power filing on the Bear River at Combe, which is 26866. This is specifically for our Combe South powerhouse. and its season is year-round.
At the run of the river.
Yeah, there's no, if it goes through Combe South, it's passing on down the river. Okay, this takes us into our other rights just outside of the two main watersheds. So in the area highlighted in green, this is the Auburn Ravine watershed, and it's kind of hard to see, I apologize. There's two X's in there to identify our Gold Hill diversion and our Hemp Hill diversion. So the Gold Hill diversion is our Auburn Ravine 1 canal, and the Hemp Hill is explanatory down below. To the north, you can see the points where we have a diversion on Ore Creek, as well as on Raccoon Creek, which is the Camp Far West diversion. There's a total of 4 rights that cover these areas. 3 of them are pre-1914. Statement 10794, established prior to 1880, covers the rights on Ore Creek and Raccoon Creek for our Gold Hill and Camp Far West diversions. Statement 13790 is on Auburn Ravine for our Hemp Hill Canal, established in 1853. And Statement 13791 is for our Auburn Ravine 1 canal within the Auburn Ravine with a similar date of 1853.
So that Hemp Hill Canal, and I think it's up to, how much, 12 CFS that goes into that canal?
So the post, that'll be the next one, and that's
8.
Yeah, 8 CFS.
Huh. How much do we typically put into Hemp Hill?
Sorry?
How much do we typically put into Hemp Hill Canal?
It ranges, we've been up to 7 to 8 CFS. I mean, I guess quite a while ago, we had flows closer to 10, but lately it's in the 5 to 6 CFS range.
The people have dropped their...
Well, I would attribute some of it to efficiencies. There are 2 major consumers on that, the Lincoln Hills or...
One is, yeah, Lincoln Hills Landscaping, the golf courses, and then Lincoln Crossing Landscaping.
Oh, Lincoln Crossing Landscaping.
Yeah, they pull out of there as well.
Okay, so that pond by, old 65.
Yeah, you could see right at the overcrossing
Yeah,
where people fish,
right.
they pull out of
That's
there.
our water. I mean, that's.
Yes, all of that water is used for landscaping or golf.
So the final post 14, right, is in our ravine is for the Hemp Hill. The season is April 1st through November 1st. So with maintaining all these rights, there are many things that need to be done to be in compliance. We talked about a couple of the issues, Director Peters, you brought up the total amount of water for the Centennial project. I'm going to give you an example for application 1270, and we have these throughout our rights. There's a lot of overlapping, but this is a general idea. So there can be some combined use terms within these rights, which is what you were referring to in Centennial. So a total amount taken from the source in 1270, as you can see, is listed at 162,221 acre feet per year, but that includes the rights of applications 2372, 6701, 6702, 8178, and 8180. So even though those individual rights might have larger amounts to them, collectively, there cannot be a direct diversion plus storage in excess of the 162,000. It gets really confusing.
Ask you to say that all again.
Well, so, but I didn't see anything on here about the diversion of the 3654X.
There was, if we go back, I believe it was 400 CFS, the direct diversion rate. I could. Yeah.
I think
it was up to 400.
400
CFS.
Oh, 400 CFS. Oh, I see. And that, okay. And that adds up to 220 if we do it, convert CFS to annual acre feet or something?
The 110 was the maximum that allowed for the direct diversion, and 110 for storage, so the maximum for the right was 220.
At 400, okay, up to 450.
Yeah.
Okay, I get it. Thank you, yeah, that makes sense.
And, along with the combined use, there's a amount used for beneficial use. So direct diversion plus withdrawal under a certain number of rights can't exceed a certain amount. And under application 1270, that amount's 164,531 under the rights listed there. So there's a lot of overlap with these rights. There are terms within them that we need to stay in compliance with. And that's just one example.
How do you keep them all straight?
Well, to be honest with you, we rely on a model that was developed by MBK engineers, and it helps us to track and record and report out to the state annually on all of these diversion points. It's a very useful tool, and we're working with them, in fact, this year to make sure it's updated and up to speed with all the current regulations.
Does it directly collect information from the river gauges or the?
We supply that information, yeah, we supply it monthly.
Is that the same as the red blue model?
No.
Different one? A little different.
That was used for the FERC process. This is more about real-time diversion of the report.
Okay, if anyone's interested, all water right information can be found at the link listed there. You can look up anything the state has on licenses and permits, reports filed for each of the rights. So that would be your source. Yeah, in addition to compliance, back in 2016, the state introduced some enhanced reporting due to the drought and the conditions and challenges we had in 14 and 15. It required that all water right holders report annually. They used to be done on a 3-year period. So every 3 years, you would file the prior 3 years of data. And statements of diversion and use were optional. They now became a requirement. So those would be the pre-1914 and riparian rights that are now required to be filed every year. Along with that came measurement requirements, known as Senate Bill 88 or SB 88. The measurement apparatuses out in the field need to be calibrated and certified at least every 5 years. That would be collections to storage at reservoirs or direct diversions off natural waterways. And depending on how much water is in your rights, there are different requirements for reporting requirements, such as daily, hourly data reports. We are one of the larger diverters with our combined use of water, so we fall in the hourly reporting requirement condition. And there are also telemetry requirements, which require us to make information publicly available, which is on our website under river and lake hourly data. You can see everyday updates with what the past day has done in hourly format if you want it down to that level.
But on all the rights, we only have to report total use annually. We don't have to.
For the state, we file total use monthly amounts for an annual total. So that's an annual reporting with the state.
An annual, once a month, once a year you submit it, and it's defined by month how much you did the previous year. That's all rights now.
Yes. Another part of compliance, of course, is the fees associated with maintaining these rights. For example, last year, fees totaled approximately $217,000 to maintain these. They typically range in cost for increases anywhere from 2 to 10% based on whatever the state deems necessary to manage the system.
Afterwards. Yeah, finishes curtailments.
Another piece of compliance is curtailments, which is what we're currently dealing with. Emergency and drought declaration was established that required diverters greater than 5,000 acre feet to report on a monthly basis to the state. We have 71 points of diversion that we need to file monthly for projections of the next month of what we anticipate to divert, as well as 71 points of diversion of what we diverted from the prior month, so they can kind of keep track during the curtailment period as to how much water is being used and where the availabilities or shortfalls may lie. These are based off of your priority dating. So the older the rights, the higher the priority for water. So we'll start working from the newest rights or the most current date down to a level where there's enough water supply to meet a certain set number of water rights. And they make their decisions and look at it weekly, and we're constantly filling out reports for them.
Based on location?
Yes, it's based on right and point of diversion. So like in application 1270, you saw there were 4 reservoirs and 4 direct diversion sites. So under that right, we have 8 files that we have to report to the state for each one of those. Report on each of those.
Yeah, their workload has substantially gone up since drought, and there's only 4 folks in our hydrography team to be handling this. It's a huge workload that has been put on them. So kudos to him and the team for managing it.
Yeah.
So,
Okay.
got a question.
Yes.
So pre-1914 water rights included fire protection as a beneficial use.
It was listed, I don't know if it was a state-included use, but it was listed as a use for the water.
And what's the wisdom in excluding it now?
We do not determine it as a beneficial use personally for NID, because it's a non-firm supply. We can't guarantee, our open canal system won't be impaired somehow by trees or debris to prevent water, so we can't sell water as fire protection.
It's not.
We don't sell it, but we do provide it to fire departments.
If we supply it to fire departments, it's in a treated water system.
Correct.
Yeah.
So it's not a guarantee, NID doesn't guarantee a source of supply specifically for firefighting protection.
Correct.
We provide it, but it's not a
Well,
use that's listed in the right.
it might be October 16th, and you couldn't, the canal would be dry.
Right.
Right, exactly, that's
Yeah.
the point, right? Is
Yeah.
that we can't guarantee the canal will always be a firm supply, always available to you nonstop.
But I thought it was not our choice, it was the state excluding fire protection.
I believe it was our choice and how we filed for these rights.
Okay.
And at the time, this was a long, long time ago, right? And fire protection and all of that has recently, due to climate change, come to the top of the list, right? Back then, it wasn't as highlighted as it is today.
Well, I'm thinking, but like Wildwood could have pumps along the lake and using that water for fire protection, because you got a stored water.
Well, I mean, that's how CAL FIRE does it, right? They
Yeah.
take a helicopter, they dip in and they use it.
Right.
It's gonna be there for, if it's needed, but it's
Well-
not its intended purpose.
Also falls under municipal use, right? So most,
Maybe.
on treated water systems, a portion of their storage is attributed to fire protection and then health and safety.
Yeah,
So it's accounted for in that.
but it sounds like some people want to tweak our water rights for environmental uses, and I think fire protection is one of the biggest ones. Because it's been the most
I think
damaging.
you could currently use our water rights for fire protection, as long as it has a municipal or domestic use in it.
Yeah, but fire right now is probably the most destructive thing to the environment, along with the drought.
Definitely.
Hand in hand.
All right, do we have I'm not seeing any questions or comments from members of the public at all? Oh, sorry, Karen.
That's okay. So this has been a very interesting presentation. Thank you so much, and thank you for managing this very complicated area. So my question is, as a board member, what do you think are the most important pieces or facts that you've presented over these last 2 meetings that board members should be cognizant of and thinking about as we proceed in the plan for water? So, this has been great information, but I'm saying, so I'm going, and? What should we take away, and what should we have in our minds about this information?
That's a great question, and we should back up a little bit and state that these first few meetings were really to give everybody an overview at a high level of what NID is, what our facilities are, and what our water rights are. This was hopefully to give enough background for folks to understand our water rights, because moving forward, we're gonna have to dig into the details on these in a little bit more clarity when we start talking about source of supply and demands for the future and how they relate to all of our water rights.
Okay.
I think as we move into the final analysis of the plan for water, you're gonna take all of these and you're gonna start counting them all up, and you're gonna say, okay, this is how much our water rights say we have, this is how much we potentially need for demand in the future, here's how climate change affects these water rights, let's put all that together. So we're gonna have to dive deeper into this. This was just meant to be high level, here's what we got.
Okay.
Peters, you got a question? Oh, I thought you had your hand up too. So my question is, I thank you, I learned today about power generation, power and water right, I didn't know that was existed. Can you tell us, how many acre feet, because we have approximately 400,000 something acre feet of water right? How many of those are actually best, consumptive use, and how many are power? Is there a number in your head? Don't go to any detail here. Because I thought that was fascinating.
That's a good question. You know, we reached out to MBK Engineers when we were doing this program to kind of help identify how much actual water the water rights encompassed without double counting. When they came up with that 450,000, roughly 450,000 acre foot number, I don't have a consumptive use number subset of that group, because some are purely just power that are not overlapping. But I don't have that.
But very interesting. That's what I learned today.
Yeah, and it's a good opportunity to remind folks that although our water rights on paper may say we have up to 450,000 acre feet of collection available, we're never able to capitalize to the fullest extent on that due to some of the limitations within those applications, permits, and all of that. They have those windows of collection and all of that, so we're never able to maximize. And rarely is there a year that's wet enough for us to capture that kind of water right.
Does the annual reporting to the water board, is there a sum total, how much we diverted and stored this year?
No, it's by a right. It's per right that they review.
It's not added.
It's not, no.
They're not all the same reaches,
Yeah.
and not same river.
So,
Yeah.
well, I will highlight that if you're interested in that, it is in the ag and urban plans. It's summarized, I should say. So that's one avenue to
So
look
won't
to.
that differentiation come into play when we do plan for water, power versus? They'll be this kind of.
Yeah, it gets a little bit deep in the weeds with the modeling, but yes, it will be part of the conversation. We had a couple of really good questions from the public, if everyone's ready. All right, Miriam Limoff, apologize if how do Lamu, thank you. With the new FERC relicensing requirements, what is your priority list for how you determine who will receive water in a drought situation when our local farmers and ranchers could go out of business without water? And it's probably one to punt to Dustin, because outside of curtailments, the priority order in the water code doesn't come into play, correct?
Yeah, that's correct. It's a good question, but keep in mind that things like FERC requirements, it's a separate regulatory scheme, but it's a requirement. In effect, it becomes a requirement of your water rights. So if FERC says you shall release so much CFS at a certain point, you have to do that lest you are in violation of your FERC permit or license.
All right, let's see. Great answer, great question. Next question. Oh.
I mean, the exclamation point is, it could be a zero-sum game.
With water, it almost always is a zero-sum game, as you know, as we spoke earlier. It's a finite resource. So when you change your operation or leave more water in stream, that by definition, takes away from another use. And it's, you know, it's a regulatory obligation. There was extensive discussion and analysis of that, and that was the bargain that was struck. And it is going to be both a financial impact and a potential water supply impact to the district, no doubt about it.
Remember, there's financial implications as it relates to our actual ability to generate power, but there's also implications to our water rate revenue because it's essentially a commodity that we're no longer able to sell. So we do need to do kind of a deep dive on the financial end to really determine what the full impacts are. You know, whatever they are, we need to be aware of it.
Well, and it could be, you know, contribute to food insecurity also.
Yeah, certainly. So, you know, as you start to going through, say, you know, things just get worse and worse and worse, and there's curtailments, and we definitely have to start making some rough decisions on prioritization of cuts. You know, it's a kind of a double-edged sword, right? Not only are people not getting delivered water, which is going to impact their livelihood, but also there is going to be a large revenue hit to the district at some point, just related to the fact that we recover some of our revenue based off a volumetric basis. And so whether or not, you know, if we're not selling as much water, rates will have to raise at some point. Okay, Miriam had a couple, I think, believe this is a comment, but it's well stated. The Nevada County Food Policy Council encourages NID to plan for systems that prioritize water for food production and agriculture. Local food production is a cornerstone of community health and well-being. Published in 2020, the Nevada County Food System Assessment cites that buying local has a positive economic benefit on the community because locally owned businesses recirculate a greater percentage of revenue locally. And I can tell you from the economic studies I have participated in, that is actually a fact that every local tax dollar, every local dollar spent does contribute a large amount more of dollars spent and invested back in your community versus spending non-locally. So, you know, definitely, although we're not a sales tax entity, buy local, shop local, and support your local farmers for sure. And then one more comment, we are grateful for NID's legacy of agricultural support, and we encourage the staff and board to continue this vital community service into the future.
Can I just add to that? My understanding from the Ag Water Management Plan is that the state basically mandates priority for utilization of water, right? People first, then livestock, then annual and perennial crops. Yeah, so I think just to Miriam's point that that protection exists within the state guidelines, as I would understand it.
That's within the water code. So prioritization for curtailments and how we really start cutting is listed. And what was the order, Chip? Do you remember off the top of your head?
You nailed it. And if you look at our drought contingency plan, that's the way in which we prioritize how we start cutbacks. And I think maybe to expand on the answer to that question, and Dustin did a great job, but on a more local level, the way we would prioritize water use in a drought year or in drought years is we go to our drought contingency plan where we detail thresholds, the targets, and then how it affects the customers and which customer classes are affected first. And as we all talked, and we know we need to update that, and so that's coming. We're hopeful that we can flush out some of the details in the plan for water process and make that document a little more customized to the community's needs. And so we're looking forward to modifying that in the future.
So,
Yeah.
but two things. One, the FERC requirements supersede that.
Yes, correct.
And two, some of the canals will not work at half capacity.
Well, it's not fair to say they won't work. It's fair to say that it will take a lot of infrastructure upgrades to make them work at a lower level.
How much?
Lots of checks in place, lots of things to back the water up, to get the water to the right level, to get into the water boxes and whatnot.
I agree with that.
Yeah.
Yeah, because some growers had to do that last year, just on their own.
And then the FERC flows, Chip, can you speak to the FERC flows that I've seen is associated with the relicensing are based off of 4 different water years.
Oh gosh, I think it's actually 6.
Is it 6?
5 or 6? I believe it's 5. 6.
None of us know.
Anyway.
It's
The
1 to
bottom
6.
line is,
16 to 60.
We at the staff level have done an analysis of how much of the water in-stream flows once the new license is adopted, how much of those in-stream flows are basically lost to the district? In other words, we put them into a creek or tributary, and they don't come back to NID, we can't use them anymore. And that runs the gamut from, I think it was 16,000 acre feet in a critically dry year, all the way up to 60,000 acre feet in a very wet year. So that's kind of the spread we're talking about. Keep in mind, our current in-stream flow requirements are about 7,700 acre feet. So that's the delta we're working with.
And when was that established, that 7? Yeah, well, I mean, wasn't that like decades ago? And
It's what, 60s, right?
yeah, like 50 years ago. Yeah.
Fish and Game Agreement?
Yeah.
Yeah, but I just think it's important to point that out because it is a dramatic change. You're absolutely right.
Yeah.
But when those were developed, my sense is that there wasn't a lot of sensitivity about environmental needs. And so, yeah, it's a big difference, but I mean, some difference is required. And NID was at the table when those decisions were reached and negotiations concluded. So and you didn't come across this way, but I just want the community to know we weren't absent from that, and that there's, I think a lot of people would say, yeah, we need to make these changes, at least some of it, we don't, and the bottom line is, we don't have a choice.
well,
We have we're a power operation, and we're required by FERC licensing, so it's kind of, to me, I just feel like sometimes it comes across as sour grapes versus, okay, how are we gonna manage this? And,
Well, I think by the nature of the fact that we all sat at the table and agreed we needed to contribute these flows to the environment.
right,
So that we were a willing player at that table. and this was our
Absolutely.
contribution. Now, we have to analyze how it will affect us in the
Yes.
future and what decisions will be made,
yes,
given the lesser amount for consumption, that's all.
yes.
I think some of the rub comes in with some of the terminology specifically that staff uses with our reference to environmental flows. And it's simply just a matter of that we have to account for it in a variety of ways. So, in our mind, we categorize and track things. It certainly doesn't mean any disrespect or not wanting to do it.
No, and I'm not really reflecting that. I just, I think we need to work together to find the solutions, and I do realize that the impact will be felt by our customers because there will be less water to sell.
So, segueing on that, this coming year, could we start working with a little more of this backing up the water, see how it works on certain canals?
I'm hopeful that we're gonna make our deliveries in the canals, which they are.
No, I understand, but I just,
What I can tell you, Rich, what happens is we get calls from customers who express their concern they're not getting their full volume, we'll send a distribution operator out there, and if we find that, yes, they don't have 6 inches of head, we will put a check in that facility to make sure they're getting their water.
so we need to get out to the, especially to the ag community at the end of Tar Ditch, that call.
Yes, please
Yeah.
do. We know last year we ran the system really tight, and there was quite a few days where we were short.
I was gonna say,
We're gonna try to keep the system.
But I think you did an excellent job last year.
Problem was that it was really short.
Yeah, we did run it tight.
Yeah,
Yeah.
and I think in a drought situation, that's,
But I had a case where someone called and went up and they were running 15 PSI or 12-15, and you usually run about 28, and put another board in and went right up to 27
Yeah.
PSI. So it didn't take much, but the perception is a lot of these canals do not work well on reduced volume.
I would encourage them to call the office. We'll make sure it's done right.
All right, we have a few more comments from the public. Kiko, hello, thanks for participating. How does selling water fit into water rights? And can you resell water purchased from others? The first question is, yes, we are allowed legally to sell water that is consistent with our water right purpose of use. as we do, as you can see, many of the water that we sell, tort irrigation, domestic, and can you resell water purchased from others? It depends on the agreement and under which it was purchased. And so we do, essentially, the only water we essentially buy that would have any potential to resell would be PG&E. Sorry, flick my pen at myself. Would be the PG&E water, and there are some requirements within that cooperating agreement related to how that would work, and they would have a portion of any profit associated with sales. All right, Ms. Josie Crawford, thank you for such a great and informative presentation. I'm new to water rights, so please excuse my lack of understanding. We have concerns about South Wolf Creek, South County, and it's yearly drying up. What is the water rights situation on that creek? I work for Wolf Creek Community Alliance, and as you know, there is a lot of concerned residents in the lower part of South Wolf Creek watershed, and it is a trout stream that should not dry up. The stream was not considered an intermittent stream originally. So this is one of the questions that we touched along.
This was
Yeah.
earlier.
Yeah, and this is actually a topic that we discussed earlier, but what we also tackle frequently. And so, yes, we do often get calls related to putting water in streams that may be dry. And the concern is that arbitrarily putting water in a stream that has dried up during a time of the year when it should be dried up if we weren't there, is not consistent with our water rights, as well as has caused some issues with the animals that rely on those streams. You really want the animals to adapt to seasonal fluctuations in water so that they move to where the water source is and are not arbitrarily staying somewhere. So we can certainly, Ms. Crawford, talk to you directly about this issue and specifically your concerns regarding the trout stream.
Sure, I can add a little bit to that in that NID is not a water supplier to south of Fork of Wolf Creek in this area that is their concern. We really have no jurisdiction over it. And so any concerns in the water quality or water theft or any usage that's going on in that stream, we always direct those folks to the state because they hold the jurisdiction over that particular reach.
That is a good nuance to that conversation. And we can speak more offline with you regarding that issue, Josie. Okay, Amy Retzler, I believe it's from Sierra Harvest. Thank you so much for an incredible meeting. Sierra Harvest is busy training and educating farmers how to run viably economic businesses to move towards the goal of having 20% of our food that we consume produced locally. We are encouraging season extension and working with farmers to grow their markets locally, including a scratch-cooked school meal program. Oh, that sounds great. A guaranteed market, for sure. The farming community is scared about their water getting cut off after they've invested in season extension strategies. How can NID and Sierra Harvest partner together on these discussions? Because the bottom line is everyone has to eat. Great comments. We do meet regularly with the ag community, and I do recommend that, Amy, we loop you into those particular conversations because I think you would find them very helpful. We do sometimes in dry years, there is risk associated with season extension programs from the standpoint that one of the easiest ways for conservation with the raw water customers would be to either start the season late or into early. So from that, I do think that it would be worth a conversation offline. And I recommend you reach out to Chip or myself, and we can talk to you directly about some of your strategies to help you figure out if there's any additional risks that we see or any additional concerns. I'll go ahead and type my email in the...
On-farm storage.
On-farm storage is a valid point, and it is a strategy that would have to be employed on a farm-by-farm basis.
And Amy, I will say our pond is under 50% right now. We have drawn on it that much.
All right. And then, let's see. And Ms. Crawford says that you sell a lot of water out of that creek. I think she's referring to South Wolf Creek. We do not. However, we might be a little bit confused on the location. So maybe we could talk to you offline just so we can verify where you're exactly talking about. Oh, and we have one hand raised. Let's see here.
Josie.
It was Josie. Josie, would you like to unmute yourself and make any further comments? Is it Josie?
Yeah, star 6, I think.
All right, Josie, you also have your hand raised. Were you wanting to make a verbal comment as well?
No,
There
I
she
don't,
goes.
There she
I
goes.
don't need, I do not need to make a verbal comment. Thanks. I didn't, I raised my hand first and then I saw we were supposed to ask the questions in the chat. So,
Oh,
sorry.
Either way, it's fine with us. We're just happy for the participation.
Okay.
All right. Any other members of the public have a comment on this particular topic? I know it was really hefty. Big thanks to Tor, Dustin, as well as Chip. They did an absolutely fantastic job. Oh, sorry, Laura.
I had one more question.
Go ahead. Let's go that far away.
Segues off of Karen's question about the, not question, but comment about the FERC requirements, the water for environmental flows. Does it say that we have to pass that amount past our boundaries, or does it say where the water has to be diverted?
It's unrecoverable.
Does it say it has to be unrecoverable?
No, it doesn't state it that way, it's just because of the location in which the agreement exists. So, and for example, I don't know, let me throw in Texas Creek, right? So if you allow water to pass Texas Creek below our canal and continue on, it is lost to the district just by nature of where it is. And each one of these diversion points that has an in-stream flow requirement is specific to a location.
Is there any of those locations, so a lot of times the creeks and the canals have become incised, and so they're disconnected from the floodplains. Are there any projects in those downstream of those diversion points before it leaves the boundary? Is there any opportunities for projects in those, maybe to connect floodplains or to make it so the water, so the least amount of water actually leaves our boundaries, where we're able to utilize?
Most of those in-stream flow requirements are also associated with the health of the delta. Yeah, so they do want the water to go through the system.
Yeah, that's really the intent.
The FERC requirements are a result of the negotiations with the non-governmental organizations as well as the 401 certification process. It's a little bit in flux, but it does dovetail into the same reasons for the basin plan amendments as well as the voluntary agreements, which is to help meet the salmon objectives for,
Right.
yeah.
And if we put it in high in the water setting, it goes underground, it will eventually make it downstream to the delta.
Well, there's a salinity issue in the delta.
Keep the salt.
Yeah.
We're forced to release it, and then the downstream people pick it up and sell it.
Well, there are certain
That's always
locations
never been.
where that may be the case. But essentially, once we release it, we don't track it beyond that point.
Yeah.
It becomes natural flows.
I think like my only point is perhaps we could look at opportunities to utilize those flows before they do.
We don't have any points.
It'd be nice to put it back in, but
Below that, we don't have any way to recapture that water, even if we could.
So your point's well taken, I'm sorry, Tor. There are many locations where in-stream flows are required that we know full well we're going to recapture those flows and re-divert them and send them to a customer base. The flows I mentioned earlier, were very specific in that those are the flows we know we can't recapture. There are many other locations where we're contributing flows into the stream that we know we're going to re-divert. Below Rollins is one of those as an example. So the in-stream flow below Rollins currently is, what is our in-stream flow requirement?
20 and 75.
So that's how much water we're required to put into the Bear River. Once it makes it to Combi, we re-divert those flows, send them to our customer base. The in-stream flow below Combi is only 5. So where we can, we maximize those in-stream flows, not only to benefit the environment, but also our customers where we can.
There are opportunities through water transfers as well as a conjunctive use program, say through Park Sutter or one of those agencies, to take consideration of conjunctively using surface water and groundwater. Because remember, with SGMA, the Groundwater Sustainability Agency over the North American subbasement is required to establish the sustainable yield for the basin. And so obviously, the more conjunctive use, they would be able to pump more without impacting that sustainable yield.
It'd be interesting to see a map of where all these diversion points are that we have to do with this FERC requirement, just so we can see the magnitude of it and where they are.
Didn't we,
I think that would be.
didn't we We went through some of
Workshop
those.
stage number one, right?
Yeah.
Yeah.
We went through,
So
we went
where
through
does it
all of
take
the,
it?
yeah, there was all the photographs of the different systems.
But does, right, but does it say where the first requirements to be?
I believe I highlighted each one of those, and you'll see that each slide shows the picture, and then the next slide has the details, it'll tell you.
And it'll say the environmental.
Yes, and it says whether it's recaptured or lost to the district, so I tried to detail all that.
Yeah,
Okay.
so that was the November, December
Yeah,
versions.
okay. So we
Yeah.
can see what the surface looks like, we can go on to Google Earth and see what it looks like at these different locations.
We have photographs.
Are
in
most
those.
of them in the upper watershed?
It's a mix, but yes.
All right, we have no more public comments. Anybody have any lasting comments related to stage 2 water rates?
Job well done.
Yeah.
Thank you.
Excellent job.
Very well done.
Very good. Now, just a quick check-in on our process. So we are teed up for the next one for watershed. Greg, you want to provide a little overview of what we have planned?
Yeah.
High level?
Yeah, love to. We're gonna bring in some, representation of cultural, opportunities and resources within the watershed, sort of the historical connection to watersheds that particularly the native, Nisenan are, involved within, the watersheds, both the Bear in the middle and the South Fork of the Yubas. I think the folks that you had brought in a couple months ago. So we're working with them to bring in a kind of a half-hour presentation on cultural resources and how the watershed is impacted and impacts cultural connectivity within the watershed. And so there's that, and then we're going to change it up to NID's sort of opportunity and how we manage, engage in, and facilitate the healthy watersheds within the district areas that we own. So we saw all of the different watersheds. Tor went over that. We've gone through some of those different watersheds and canals in Chip's presentations on an earlier basis. And so now we're going to talk about some of the grazing opportunities, the forest practices, and the forest thinning, and the healthy environmental processes that we do. How we can best ensure that we have healthy ecosystems, terrestrial systems, aquatic systems, all in turn making sure that our downstream systems, that we have the supply that we need in order to ensure longevity in our watershed. So that's kind of a brief overview. We're still working on the flow and the process. We had to change the date. It's going to be
Good point.
the April 19th. So it was going to be, we've been having these the Tuesdays prior to the first board meeting of the month, due to the spring break area, which is right there between that week of the 11th, April 11th. We've switched that date, and I believe all of the board members have said yes to that particular date of Tuesday, April 19th. Right? And that's, I believe it's changed on the website, so hopefully everybody on the, on tonight's call can remember that. It's not the second Tuesday of the month, it'll be the third Tuesday of the month in April. Then we will continue. We're gonna try to keep to these dates so that everybody has sort of a process and we get in a rhythm. And so we're not changing them all the time. This one just happened to be that way.
And we're only sticking only one a month, we're not gonna entertain.
Probably when we get into strategic planning, we'll probably try to squeeze into a month. I know that some of the board members have some conflicts this month, so it just kind of depends on what's going on. Yeah, we have been a little bit slow.
Yeah.
Any other process-related comments?
It's not like you don't have something else going on.
Right.
You got a question?
Ricky, sorry, Ricky.
That's okay. So at what point do you see the board engaging more in terms of setting policy and decision points, within your matrix? Where do we see us getting input as opposed, or giving input as opposed to listening to this base information, which has been so excellent, but the base information has been the foundation for us to then go forward and actually make a plan, right? So at what point do you see that piece, coming? Where do you see it happening?
Right, so we can look at that really quick. If you look at the matrix, it identifies each stage, the outcome, board decision points, potential stakeholder involvement, general comments, and then proposed engagement techniques. So the real decision points come in strategic planning. So I
Okay.
do know that this is a long haul getting to where the actual rubber meets the road and decisions are made by the board. But we did feel it necessary to get everybody essentially having the same level of understanding of the system, how complicated it is, including our relationship, the system with the watershed and how we operate within it. And then we did add that risk item. So look
Right,
to
I agree, by the
strategic
way.
planning.
I'm not, negative on any of this. I think this has been just superb. But I just was curious, and I will go back, thank you for that, and look back on the matrix and for those decision points.
And then after that, that's where once we get to stage 5, strategic planning, and then all of the stages, then we get into stage 6, which is basis for the plan for water, and that should be a fairly quick meeting, but is really intended to set the framework for which the plan for water will live and exist and be. Planning horizon, when it'll be updated, what type of policies are needed for it. And then we get into the real fun detailed in the weeds with stage 7, 8, and 9, and that's hydrology, demand, and supply. And then that's when we get to roll up our sleeves, be innovative, think out of the box, come up with awesome solutions, and stage 10 for strategy options, and then finally strategy evaluation.
Wonderful, thank you, Jennifer.
It sure is. Website is all up to date from what I saw so after every meeting, we post a video, we post the meeting notes, we post any revised matrix or anything that's all on the website under Plan for Water documents.
We've noticed we've been a little shy on some attendees. We had about 80 the first couple of meetings, and so tonight was a little less. Encourage all of you with social media. We are trying to push these minutes or these meetings out with social media and blogs. We have a blog on the website that references these meetings and talks about the different stages. And so there's a little more in-depth, but we have all the questions that people have asked. We're trying to do a really good job at answer each of the questions that were asked in narrative form so that you can go back and read. It's intended to be that if we have a light turnout, people can come back and just on their own time go back and look through. Clearly, all of these meetings are videoed and the PowerPoint presentations are on the website, so they'll live there for a long time.
Yeah, we started the meeting with about 20 attendees. We're ending the meeting with about 22 attendees, I think. During the meeting, we have topped out at maybe 35.
Yeah.
And that does include some staff intermix, but.
I have one more question. We had an RFP out for technical assistance for meetings 7 for the nitty-gritty stuff. And my understanding is we're not gonna hire anyone out of that.
We're talking about that tomorrow?
Yeah, we can talk about that tomorrow. We, just real quick, we received only one proposal. We received a lot of feedback from many, many firms. It was too large of a project, essentially.
Right.
So, and it was a fairly hefty cost associated with the effort. And so based on the feedback, we've talked with a ton of different firms about why they didn't propose. We went and I personally invited several firms to participate. We've determined that it's best to split it out into smaller, more manageable chunks. And so that's what we're working on right now, is splitting that out and then reissuing that
We are still going to get.
Yeah, we're definitely trying to.
Something.
Yeah.
Because you said we're gonna do it ourselves.
No, we're not doing it ourselves. Our plates are a little full. It's some really heavy-duty modeling. I think our IT system might die.
Yeah.
Push it over the. Yeah, those water models, they can, working at an engineering firm, I actually sat next to the water modelers, and those models will run for weeks on end. Yeah. So.
Very.
All right, with that, I will turn it back over to President Beerwagen.
Thank you, Jennifer, and thank you to all, to the staff. Very interesting information, and thank you to all who participated today. Meeting is adjourned, and we'll see you tomorrow morning at 9 o'clock. Thank you.